think that is the sound for the live.
That's it. Hey Walter, how's it going, man?
Hey Annie, I'm good. How are you?
Very well, thanks. What a crazy start to Monday we've had. Oh man, I don't know if you if it looks like I had a nap, that's because I just had a nap. I'm getting old now, man. I'm having
So
naps.
good. I don't think it's an age thing, man. I have to take a nap every day at midday. That's an essential, absolutely essential.
Okay, so I'm just going to share my screen if you don't mind. I just want to just cover a couple of things.
Yeah, that's fine.
And I'll show. Okay, the NASDAQ hasn't opened, obviously. I'll just quickly share my screen. Yeah. Right. So that's the NASDAQ. It's just been the last week. I think we've definitely been back in the like a tradable range in terms of ATR, the smaller time frames. The week prior to that was very difficult for me to trade. I didn't trade the prior week just because the 1 minute ATR, the candles were like. I mean, there was one day where the ATR was like more than 100 points per 1 minute candle. It's crazy.
That's crazy. Yeah, absolutely crazy.
So it just made it impossible to scalp. Very, very difficult. But we're definitely back into those ranges. But if I look at what we've seen this morning on things like the pound US dollar and let me just go to the pound US dollar. I mean, this is the opening candle. This is the midnight candle, right? From when the market opened, that first 4-hour candle. It just massive push to the upside. Now, we spoke about, well, we were not in the same session, but this level here, this resistance level here, I do not like. I think we will be in a session together. I can't remember, maybe not. But this level
what day was this?
The 15th. So probably not, right? Probably not, because that was last week Tuesday. Yeah. So when we reach levels like this, so these resistance levels, I don't like to trade the resistance level itself, even though I am bullish on the longer term time frames. I don't like to trade these resistance levels because I mean, two things can happen. Obviously, at these levels, it can either pull back or it can break through. I don't like to guess which one it's going to do. I like to just wait and see which one of those two things it is going to do. So obviously, if it does pull back, I identify the levels of levels of interest where it can potentially pull back, or if it does break through, then I would like to trade the retest, and that's what we had on Thursday. We did get a retest, so I got a really nice trade there on Thursday. But I mean, I say really nice. I mean, I gave back half my profits. That's the story for another day.
At least it wasn't the whole thing, huh?
It was, yeah. The thing is just I was on Wednesday. We were talking in session 3. It was like, okay, what type of day is it going to be? Because it's Easter weekend. Can we expect is it going to be like a Friday? Are we going to get any volume and that kind of thing? So that really did kind of that had an influence on me for sure on Thursday. When because I was up like 4% and I only cashed in 2%. Like that kind of sucked, but I'm over it now. I slept it off in the nap I had earlier, so I'm over it now. So, but this level here obviously would have been a resistance level. It broke through that, and then another retest would have been nice. But it just, you can see it's a very, very strong. It just pushed up, and now if I zoom out here. We are, okay, this is the 4-hour time frame, but we're now hitting another resistance area. So very similar approach again. I don't like to trade those levels. It needs to either pull back or just break out of that level and give me a retest. So it's a very similar approach whenever I reach those resistance levels. But if you look at the longer time frames, I think you can see it's pretty extended. But this pretty extended, but this pretty extended kind of state that we are in. It doesn't really mean much in the type of markets we are in. Just look at gold, for example, right? I mean, today, again, just another crazy move. And I say crazy move. I've said this so many times. I mean, when we had this breakout, like, that's crazy. And today, again, it just keeps...
I don't even have any expectations anymore. I'm just
it's just...
as it comes.
Yes, but we are in very, I don't know about you, but this is the first kind of tariff war I'm involved in. The previous one was in 1930, so I wasn't around for that one. But my goodness, man, like gold is just very clearly.
I mean, do you see gray hairs on my head, Jannie? I definitely wasn't involved in 1930s trade wars.
Anywho, hello, hi. Hi to you as well. Yeah, so what I'm trying to say is, like even on gold, it looks like it's so far extended. We need to have a pullback. But I mean, the type of markets we are in right now, I wouldn't be surprised if it just keeps going and you just get very shallow pullbacks and not made, really nice corrections on FIB levels or anything like that. So yeah, for me right now, the pound US dollar, we kind of have to, for me, we need to either just pull back or just get away from this resistance area. Just break out, give me a retest, or pull back to a level which will be probably over here. Let me just draw it over here. Yeah, right there. So one of those two. If I can get this level, I'll definitely be interested in the long. But right now, I'm not interested in the pound US dollar. Okay, you kind of missed that move. If you're a swing trader and you leave trades open for a longer period of time, you'll definitely be smiling. Because yeah, it's just going in one direction, right? So yeah, so that's the pound US dollar. We'll see what the NASDAQ does. I think it's going to probably move lower today. But the pound US dollar, yeah, it's been just going in one direction. And then the Bitcoin, Grandpa Bitcoin, as I labeled it on Thursday, just finally got out of bed. We've been in this range for some time. And we broke out. This is also overnight. We finally broke out. Now I had two positions on. My first position was, if I just zoom out here, you'll see that double bottom. And we got that confirmed double bottom. And then the pullback to this neckline, which was also a Fibonacci retracement level. So I'll just quickly put that back on so you can see it there. Yeah. Excuse me, just a beautiful bounce off the 50 there. So for me, that was it. Bitcoin is turning, and that was the first swing position. So the trade is still open. And then the second position I added. If you look at these two horizontal lines, if I just explain why I identified those levels. So we got the pullback here, and then it broke higher and making a new high, right? So it broke the neckline, the double bottoms neckline before the retracement. So it broke out there, and then you had a pullback, and then it broke out higher again. So this level before it pulled back, and then the pullback level itself, that's the support zone for me. That's the support zone I identified, and we were trading inside the support level. And then when we broke out above it, that's when I took my second position on Bitcoin. So I was in two positions. And the second position, like I mentioned last week, is like I would get out at this resistance level if price kind of struggles there. But if I can get a really nice strong breakout above this level, I will keep it open. So if you look at this 4-hour chart, we've had this really nice push getting out of this range, and then a smaller candle. And so for me, it's like, it's probably going to pull back first. So I closed my second position, but the first position is still open. So I can just quickly show you on my Hola Prime account. So still in the first position, but the second one is, you'll see it here, right? So the very last entry here. So 21st of April today at 12:28 at level 87,315. That's where I closed the 87,315. So that was 87,3 around there. So that's where I closed the second position. And yeah, I'm still in the first position. So what I'm expecting here is, well, very similar to the pound US dollar, right? We're at this resistance level. I don't like to guess whether it's going to break out or retrace. I'd rather wait for it to just break out and retest, or for this to pull back give me a potential entry, so a level of interest. Now, if you look at how price has been trading here, it's a very kind of let me just show you what I mean here. It's like look at that very steep kind of incline there, right? Steep angle. So if you typically, when I get that and I try to identify where this can realistically pull back to, I just use Fibonacci levels. Okay, so I love my Fibonacci levels. Okay, so the retracement, if you look at the highest point there, so my level of interest would be at the 50-year, okay, which is also at the highest point of this range. So you get some confluence there. And of course, the 61.8, which would be a stronger level. So if price, so there are only two scenarios, okay? It can either break out and retest, or it can pull back to one of these levels of interest, the 50 or the 61.8, and then it's going to be about price action, how price action behaves at those levels. Obviously, you want to see it turning around on multiple time frames. The 4 hour, I feel, is especially if you want to leave the trade open for longer periods of time, then the 4 hour makes sense. Okay, you want to see price really finding support here and trading back up, rather getting a little bit late than trying to, get in right at that level. Don't just press the buy button. It's about is it finding support there? And then if it is definitely moving away, rather wait and enter a little bit later, but you get that confirmation that it definitely is finding support there. And then the probability for this resistance level to break is much higher, okay? Because we've already been there. And so it's likely to not find resistance there. Worst case scenario, maybe like a range and then break out further. So anyway, so that's the reason why I took off the second trade, but the first one is still on. Does that make sense?
Makes a lot of sense. Yeah. So at this point, you're waiting for, you've taken some profit, obviously, but at this point, you're waiting to either add on to your trade if price pulls back, or you're waiting for price to obviously break above that high.
Yeah, that's exactly what I'm waiting for. That's exactly. So it needs to either break. So when I'm in a resistance level, I always, with the swing trades anyway, I will take some trades off the table. Okay, but on swing trades, you really want to add to your position when you write. But obviously, this is like border control right here. We don't know if if they're gonna let us through. But right now, yeah, for me, it makes sense to take that position off, the second one, and then just wait and see what happens, and then potentially get another entry. Yeah, and I tried to sell Bitcoin to my dear colleagues on Thursday. I said to you guys, I'm going to sell Bitcoin to you today. And what I did was I took a screenshot and just kind of turned the picture upside down. Is that something you do or not really?
I'll take a screenshot and turn it upside down.
Yeah. I'll show you now. Yeah. Bitcoin 16 April upside down. Let me show you what I mean.
Oh, interesting.
Okay, well, this is not upside down yet. There we go. So I tried to explain that the probability is definitely higher for this. Is obviously now before the move down, because we got the move lower. But if you look at this upside down, because we were like this, the opinions were very much kind of divided in terms of it's going to go up, it's going to go down, so on. So if you put Bitcoin upside down and you look at this level and you say, okay, this is a major resistance level on the monthly time frame, okay, which it is, okay, upside down. Major resistance on the monthly time frame. You get this beautiful double top and you break the neckline. Now you get a retest to the neckline, which is also a Fibonacci retracement level. And at the same time, you're making a lower high. It comes down again. It breaks this diagonal line as you've been in for some time now. And now you're trading below that. This is a resistance area. Are you long or short here? What would you do?
You're looking well, it's a classic trend break retest, right? So you're looking to go short. Yeah,
it makes more sense for this to go to the support level, maybe even So those are the levels that you'd be interested, but you're not going to long. It's very difficult to build a case for going long right now. If you say to me you want to go long, okay, the chart's upside down. If you say I want to go long, then this is the level you'd be looking at. Not where you are right now, definitely not. So, but anyway, like I was just trying to make a point. Still nobody wanted to buy into it, so it didn't work.
No, that's actually I like that. It's a very genius way of looking at things as well, because I think like it also fights that predisposition to always be leaning in one direction, or whether long or short. And kind of like flipping it allows you to obviously consider that alternative viewpoint. So
yeah. No, it does help, because some people they better at shorts. They prefer to take short trades. They can see it better.
Exactly.
Right.
They can see that. They can see shorts a lot better than longs, and vice versa as well. Some traders can see longs a lot more, not even better, just a lot more frequently than they do see shorts. And sometimes people can actually have a fundamental bias to, like with Bitcoin, for example, where they're bullish because they're holding long-term, they're holding some Bitcoins in the long term, and obviously for them, they want it to go up. So there is also sometimes that emotional element that predisposes a trader to lean in the bullish direction as opposed to bearish.
Yeah, exactly right. As you could just like, if you are like more of a short person, you just, because you can see it clearer, just turn the thing upside down. You've got plenty of time, right? This is not the minute chart. This is the 4-hour chart. Like it takes like 4 hours for a new candle. You've got plenty of time to really pull the charts apart, put it, turn it upside down, do what you need to do. But so Bitcoin, I think, I mean, there are so many talks about, but I do feel that this 94 level is a pretty strong resistance area. So, but then again, I don't really like to kind of do analysis past any key levels, because it really just depends on how price unfolds.
It depends on reaction at those levels. Price could react in a very strong way. Sometimes 100%. Weeks.
Listen, the market is open. I just quickly want to see what we got here. Okay, we're still in the 50. There's only 3 minutes open. This is the 15-minute, half an hour, 1 hour. We'll see. It's a bit slow right now. Anyway, to get back to Bitcoin, so I'm still bullish Bitcoin. I'll be bullish up to the roughly the $94,000 level, and then from there it's going to be another crunch time moment, and see how price, like you just said, like how will price behave at those levels. If I just go to the daily, how price behaves at this level. Is it going to reject? Is it going to break through? And you just kind of handle it. Take it from that point, but for now my target is 94,000. Then hopefully I can get a couple of extra entries. We just need to get through border control right here, and then I can continue to add to this position that I currently have open. But that first trade, the only thing I don't like about the swing trades, Walter, is the swaps, right? The swaps, like especially if you range. So we've been in a range for 3 days or something last week, and like obviously with the CFDs anyway, with the leverage and so on, you're borrowing money, you have to pay daily interest on that money, or they call it the swap. And if you are stuck in a range for some time, it can really start to eat into your profits, because that trade was open, those two positions were open for nearly a week, and the interest or the swaps were nearly half a percent of the total account.
For Bitcoin, it's absolutely insane. Like I remember once I held a trade for Bitcoin overnight, and I woke up and I looked and I was like, wait a second, what's going on here? And I got charged something like $150 for holding it overnight, and I'm just like, that's
a lot,
absolutely silly. So I mean, this is one thing of swing trading for a long time I've never liked. So this is why, like, the maximum I hold a trade for is 24 hours, but my average hold is 3 to 4 hours. I'm out. So I have no interest in holding a trade, especially for what I trade. For gold or Bitcoin, they tend to range quite a lot. And then they make like an expansive move for like 2-3 days. And then after that, they get range bound again. So for these two products, I find day trading them to be a lot more rewarding than holding trades for a longer duration of time.
Yeah, I agree with that. It only makes it like swing trading is like you have to be right. Your bias has to be, you have to be correct on your bias, obviously, and you absolutely must add to your position. Then you can make some, it can really pay off. Other than that, otherwise, like for example, do you remember this pound US dollar trade? We've been in that range, for nearly a month. Right, and that's a long time to be stuck in the range. And
it's a very long time to be stuck in the range.
Yeah, so the swaps there can definitely eat you alive, man. Like especially if you build up position and then another day, 2 weeks, 3 weeks. Like, oh man, you're gonna start to get squeezed and potentially close out of your positions because you're just not. The interest is killing you. Or the swaps.
Unless
It is interest.
You're in a position that has positive swap, where you're earning interest in that position, yes. But the majority of the time, like if you're in the right direction, you're probably going to be getting charged negative swap. So it's just something to just be aware of.
Yes, yeah. So, but Bitcoin, I definitely paid. I think I paid in total more than $200 now. For the week in swaps. It's not a lot, but I mean on this Holo Prime account,
it adds up, man. It takes away, especially with the floating P&L. It definitely takes a good chunk of profit away.
Yeah, it does. Okay, so that is it from now. I'm going to keep an eye on the NASDAQ. Okay, you can see that we are trying to move lower, but it's not. It's a little bit rangy. I don't trade the first 15 minutes anyway, so we'll see when this candle closes if I can get any opportunities that I can trade for the session. But for now, over to you, Walter.
No worries. So I'm just going to share my screen. I must say it's good to be back in front of my screens again because like last week I was in Hong Kong. So nice. I was just trading from a laptop and. I know a big part of trading is the freedom of being able to trade anywhere, but I'm a sucker for having a bigger picture in front of me, man.
Well, yeah. Gulam John, hi. I'm sorry if I mispronounced your name.
Good morning or afternoon, evening, Gulam John and Annie. Any questions, by the way, guys, feel free to just drop it in the chat, comment. We can see your questions and we will be happy to answer them. So, all right. So I'm going to jump on this. As you guys already know, I start my trading session in Asia, and because I live in Asia, so I tend to start trading from Asia / open, and then I trade London, and like 2-3 days a week I trade New York. So so I'm just going to talk about like gold projections, what I looked at today. I took a trade on this, and actually what could happen as well in New York session that I'm also anticipating. But gold has been pretty simple this past few days, just because it's been one directional. So from the last time I mentioned, the only major area of liquidity that price actually tapped into was this daily bullish order block, which on the weekly is basically this weekly imbalance for fair value gap, whatever you like to call it. So that was the only major draw on some sort of sell cycle. Ever since then, market has just been on the higher time frame bullish. Now, at some point, of course, the price will come back down to another sell cycle, which on the weekly case would be this new block that was created at the close of I think this was 1, 2, 3, 4 weeks ago. Right. So this candle would be another area the market tapped into on the new move to the downside, and that coincides with the daily. So on the daily, this is your new bullish order block, right? So that's exactly what we're looking at on the weekly time frame as well. But for now, obviously, like I always say, trade what you see, not what you want to see.
Mm-hmm.
So just onto the 4-hour time frame. So going into New York today, or rather going into today's session, for me, bullish was the main direction because, so if you look at this, I covered this last week. So it's a fair value gap on the 4-hour. The market reversed, contracted right into that fair value gap, and this one from there on, it was a very strong rejection, forming this sort of like spinning top, and then thereafter we saw sustained bullishness, obviously seeking buy side above the recent high, and then obviously seeking new highs thereafter. So again, the 4-hour, very simple price action. 1 hour, pretty much the same thing. Price came down, took out major sell side before seeking buy side above these prior highs. So that was just the frame for me on the HTF. What I used to identify the setups is the LTF 30 and 15. So on the 30 and the 15, there's been multiple cycles that were presented itself. So on Friday, on last week, for example, there was this like nice bearish cycle which I traded. So after the break, the retest, and then continuation to the downside. But then on Friday, there wasn't any setup on this, right? So the reason being is because there just wasn't any retest of anywhere that I would take a trade from. So like in this case, price came up, gave a bullish break of structure. This would have been my AOI, unmitigated. Price did not mitigate the order block, just kept rallying. So I was like, cool. Asia this morning, again, there was no setup for me this morning. The reason being, price opened, the market opened, and it was just a sustained rally to the upside, no problem. But what happened was the market came down, obviously retested this bullish order block, gave a new bullish cycle. This is the first instance. Secondary instance, this became a no-brainer setup. Again, because when I see stuff like this, when I see the market break structure and create a new high after that, for me, the next move is a retest of the recent order block and a continuation thereafter. So it's a very simple trade. With this one, because again, there was no previous price action for me to use as a target, I simply just went for a 1 to 2 because price has already been overextended for the whole day. So there's no reason for me to sort of like have like a 1 to 5 target or something ridiculous.
Yeah.
So it's a very simple trade, just 1 to 2 R to R on this trade. Sorry.
It kind of makes it makes it difficult to set a proper risk reward ratio if there's just nothing above you. There's no resistance above you. There's no area you can target. There's just nothing. It's just open skies, which literally is the case.
Space. So in that case, I just set a static. Target. So I just utilize. So, but for me, the minimum like that I aim for any trade is a 1 to 2. So that's why, like, when I see stuff like this, when I see structure like this, because I do anticipate that one final leg, and that one final leg is typically. So again, I'm just going to go into technicals, but that one final leg is typically one full move of this initial expansion. So what I mean by that is, if we take like a Fibonacci and we draw like 0 to 1, so this move is usually going to be double that. So I'll use this line to demonstrate. So from year to year, that's one move. So typically, when the market expands into that final leg, it will make exactly the same length of move for that final leg. So that's why, like, a 1 to 2, as long as I can get a good entry within that 50% area. I don't use FIB, but I just use my eyes in this case. But if I extend from the low to this high, that order block was sitting at around midpoint. So as long as the trade is coming from midpoint, I can anticipate a 1 to 2 will take place. All right, so that's just generally what goes into the so it's not like I'm hoping for a 1 to 2, but there is a reason behind why a 1 to 2 is very likely within the context of the range that's already taken place. So now that that's happened, right? So price has obviously delivered that final leg. There was another setup that actually formed just now. So there is another one that is usually a continuity. So when the free leg forms and the price trades above the free leg, sometimes the market will retest the order block at the third instance and then trade back to that recent high. But this wasn't something I wanted to take just because the range again wasn't appealing. I didn't see a feasibility of a 1 to 2 taking place. So I decided to just sit out of this and see what comes next. So here's what could come next, ideally speaking, in New York session today. So if the market were to, for example, so it's created this high, it contracted, which is already done. It trades back up to take out the recent high. And then there is a aggressive shift to the downside, given a break structure, right? And then it delivers a new low after that break structure, so a new swing point. in this case, my interest would be to sell at this bearish order block, right? So I'll be anticipating a retest of that order block and then a continuation to the downside. But for now, there is nothing. I wouldn't recommend buying, just again because the market has already been overly extended from Asia into London into New York Open. It's just constant bullishness. So there will be some sort of bearishness, most likely going to be bearish price action in New York. It's just about waiting for the right setup to take place. So for now, gold, I'm just on a standstill, just waiting for some sort of structure to form to indicate bearishness.
Okay, that makes sense.
And as for Bitcoin, so Bitcoin generally bullish. I had fun with this over the weekend. Some nice trades within this range. But I was waiting. I mean, I anticipated the price to break out of this range last week, Friday.
Sorry, Walter. I think we're still looking at your gold chart.
Oh. Wait.
Yeah.
Okay, there we go. So I'm just going to start with just a reminder of what I'm looking at on the bigger picture, because it's been the same for a few weeks now, for a few months now. But yeah, so I'm going to start my journey from the weekly. So weekly, again, my general thesis is that the market will essentially trade into where this line is that you're looking at. We're looking at here. So this line is sort of like, so you see this range that was formed on the weekly time frame, right? The midpoint of this range is right here. There is a very significant price action on where this purple line is, which we're going to demonstrate on the lower time frame. But essentially what I'm anticipating is for the market to trade into this area, midpoint of this initial range. And then from there, I'm anticipating bearish continuation to the downside. So I'll see how the market reacts around this level. If there is a strong reaction, that strong reaction will probably sustain towards this low within the weekly bullish order block. So that's just my long-term thesis on Bitcoin.
Yeah. What is that price level there? Is it also around 92, something like that?
The midpoint, so my profit line is 88, so that's a very specific price area. As for 88. The midpoint, that's like 91.9, so the 92, yeah.
Yeah, okay, but that's very similar to the major resistance I've got there as well. Mine is a little bit higher, 94, but I mean, you'll get definitely. You need to focus on price action once you get to those levels, because you'll be able to see the picture when you get close to it.
Yeah.
Okay.
I mean, there's the minimum, and then obviously price can shoot past the minimum and do whatever it wants above that. But on the daily, I mean, this minimum that I was aiming for, so where that purple line was, so this sort of like 88K, so relative equal highs. So it's very juicy buy side liquidity above these highs. So, and between where price is and these highs, there's nothing there. So there's very little resistance between where price is and these highs. So I do see a very high likelihood the market will take out these highs. And then again, just depending on how strong price action is at these highs, if it's like sort of a tap and then a pull back into the range, market could stay in this range again for like a few more days or weeks on end. But if it's very, very aggressive break above this high on a daily time frame, then so when I say strong break, what I mean is the daily candle basically closes above this high, then it's likely we see an extended run into sort of like 93K and potentially even 95K. But for now, the next target for me for Bitcoin to the long side is 88.7K. So take a look on the 4 hour.
No, I'm just saying I agree with your levels and the bias as well.
Yeah, it's very similar to levels as well. But taking a look on the 4 hour, again, I just have this same daily high labeled here. So on the 4 hour, we can see it's just these are relative equal highs. So it's a bunch of highs just hanging around here, which is really nice. So it's a very, it's a price magnet right now. And price will most likely, especially as price is broken above this range in a very, very strong bullish move. I do see potential continuation of bullishness into this equal highs over the next few hours or even day on end. But for now, I mean, another confluence I really like on the 4 hour that I'm seeing here is, again, that 800 EMA, like I mentioned, tends to act as an aerodynamic support and resistance for price. Price has broken the 800, So we could be seeing this acting as some sort of a support for price into those equal highs above. But for now, again, I put a lot more emphasis on my sort of like 15-30 minute cycle than I do on this, right?
Yeah, I mean, sorry, Walter. If you go back to the 4 hour, the pound US. Okay, we got some comments about pound US dollar is very powerful. Yeah, very, very strong. We'll get back to that in a moment. But on this the 4 hour chart, there are so many patterns within patterns, like the double bottom that we can see there, and then higher low. That's something, and also this breakout that you get right now is also, if you look at the pattern just before that, you're getting an inverse head and shoulders pattern as well. Okay, so you get that range is the second shoulder, and then the shoulder before the double bottom. It's a bit of a snake tongue head, double bottom head.
Yeah.
But right, there's a lot of like if you are short, you've got a lot of things to fight. You've got a lot of things that's against you, right? Bullish signals against you. But but I agree with you. At the 92, 94 level makes a lot more sense.
And I think also it's important to note as well, this is going to come in handy in the future. So if, for example, what would have given me confidence in a much more stronger or a more sustained bullish run is if the market had, so when it was making this initial move to the downside, let's say that there was a lot of aggression, there was a lot of sell activity into these lows, right? So the market basically purged these lows and then traded back into the range and then gave that accelerated move to the upside. That for me will give me a lot of confidence that it will probably like rally to 95, 96K, so somewhere up here, right? But the fact that the market didn't do that, it left these areas unmitigated and it just rallied and broke to the upside. This makes me think that this bullish run is going to sustain, but it will run out of steam pretty early on. It's not going to have enough steam to get to like these higher levels at this moment in time. So these higher levels meaning from like 97K to that 102K mark. So for now, like the trading range, like for a day trader, like this trading range, a lot of money can be made, right? So I'm not really fussed about price getting all the way up there. But for me right now, this is my trading range. So from these equal highs to these equal lows. And then once the market breaks this high, then my new trading range is going to obviously be from this high right there to the low to this, to basically the highs of this range being broken. So that will be my new trading range. But for now, this is where I'm very focused on between sort of like the low of these lows that were created of this range at 82K and these highs at 89K. And Bitcoin can do a lot within this range. Like I'll give you an example. So today, so if I just go down to the 30 and the 15, I'll go down to the 15 first, but to the 30, and then I'll do the 15 afterwards. So today, price did give a setup on this. I missed this just by 15 minutes. I had because I had a very long flight yesterday, came back, and I was exhausted, man. And then I woke up this morning and I was just like, oh God, I'm so tired right now. So I missed that Asia session, crucial time for me to capture that first trade of the day. But in this case, so this morning, start of Asia session, because I started trading London today instead of Asia. So price did give that break structure to the upside, retested the order block very nicely, right? So this would have been, if I had woken up and traded my usual session, this would have been the setup I would have taken this morning. And I wouldn't have taken it to as high as my price is. I would have just taken it to this high because I was targeting this high over the weekend. So yeah, it's quite funny because there was a few. So I got in on this trade on Friday and then took out some of my position at this high. But I anticipated the market would reject it and then maybe bounce and break and then rally. But then it came all the way back down here, and I was like, fair enough. And then after that, it then gave that big move to the upside. But yeah, so this high was always a target. It just so happened at a time when I wasn't.
I have to say, I didn't trade that last pullback, but I did see. Okay, obviously you inside that range, but if you look at inside that range, especially on the 4 hour time frame, there was a little triangle forming, and you made a higher low inside the range, like over there, and so right? There's probably I can probably show you as well if you want. But then you
Yeah, it's
get
down
that
here.
those two last bearish candles. I'm like, oh come on, man, how long is this range
Yeah.
going to last for? And then it just kind of it pushed up. So
Yeah, it looked like it was gonna it looked like it was gonna go for the low, but this is like that sort of play that I like to look for: buy side to sell side to buy side. When the market basically came from area of sell side down here, and it came up, took out buy side, and then left equal highs, very crucial, and it came back down sell side, and it came back up buy side, and it came back down sell side, and then went for the big buy.
So you you trade those you trade ranges. Obviously you look at the 4 hour, and then you'll time it on the smaller time frames, right?
Yeah, so I trade ranges, but I traded ranges on the 15, because the cycle I look for it exists 15, 30, even within ranges, and even within ranges, one can still catch really powerful moves. So like in this case, there was this reverse, there was the bullishness that was like a 1 to 4 to the upside, into this high, right? And I took only 50% of my profit on this, and then the rest I got scratched out at break even, and then the market came all the way back down, and then obviously reset within the range long, and then this long obviously carried into these prior highs. So that was the first and the main trade of today for Bitcoin. There is another trade I'm looking for, right? And I think it's happened just now because I was talking. I was a little bit hesitant about this, but I'm just like, let me wait and see. So this is my thought process. My thought process is like this. Right now, price is obviously traded into that 4 hour imbalance. So this is a 4 hour gap, right there. So at this point on the 4 hour, the market has traded into sell side, and then from there we could see a move into buy side, which would be obviously towards this high and the prior and the higher high above that. On the other end, there is a possibility that the market might simply contract. So we might see bearish retracement into, so the two areas the market could retrace to, right? So we could see retracement into the equilibrium of this expansion. So the equilibrium of this expansion is that 50% level right there. Or we could see a retracement into obviously these highs that were broken, and the market could simply retest it. But because right now we are in a buyer's market, I'm very hesitant with selling because I simply do not know how far the market could retrace. But
yeah, I definitely wouldn't sell it. I wouldn't sell it. I definitely wouldn't sell it.
Yeah.
I won't buy it either right now.
It's a very, unless there's a good potential of a good RR. Selling is scary, but there was a sell opportunity that I saw here, which I was hesitant of taking. So obviously after this full bullish cycle to the upside, some sort of a reversal is imminent. So the market did give an initial break of structure right here, right? And then after giving that initial break of structure, it gave that second leg right there. And then after that, my area of interest, sorry, let me just adjust this slightly. There's something that I missed. All right, so break of structure right there. Actually, the second leg is right here, and this is that final accelerated leg. Right, so, and then after that, obviously, the area of interest became this bearish order block. So this is a recent order block. Now, if all things being equal, if I wasn't being a pussy and I did take this trade, I would have sold here, stop went above the high. And it would have been a 1 to 2. Like I wouldn't have needed to have done anything crazy ambitious. All I needed to do was have taken this back down to the low, and I could have still, netted a 1 to 2 on this trade. But the reason I didn't is because, so if you take a look on the 30 minutes time frame, right? So 30 minutes is pretty much very similar structure. Market has given that initial break structure to the downside, secondary leg, again, that very classic order block retest back down to the recent low. But the thing is, Bitcoin sometimes can reset bullish without you realizing. So what I was very aware of is the fact that when the market gave this, so it gave this full bearish cycle on the 15 minutes, and then it came back into the range, and then it traded above this high. Now, because this happened after the market traded into a key major area with liquidity, which is the 4 hour, I was hesitant because I'm like, okay, market has tapped into a major liquidity on the higher time frame. This could be a break of structure to the upside. For me personally, I don't trade ones. I only trade 1-2s. So a more stronger setup would be if the market were to trade above this high, create a new swing high that doesn't trade back into the range. Then in that case, this would be my most recent area of interest. And then all I'll simply be doing, and this would be a very no-brainer trade, I can take this with my eyes closed, is to trade the retest of that block to the upside. That for me is something I'll confidently trade. But the shorts could still work. Yes, the market could simply trade back to this low that was created. And then after taking out this low, we could see a very aggressive move to the upside. I would rather wait for the aggressive move and trade a continuation of that than take a potential short that, yeah, right now the market is leading in the opposite direction to that short. And I have a very clear buy side target to the upside, which I would rather trade towards, but I do not have any clear sell side targets to the downside. Hence why I hesitated in taking that short setup from the 30 and the 50 minutes version of the block. So right now, again, Bitcoin, it's a waiting game. Long is the better direction, absolutely, 100%. But for now, it's just waiting for the structure to line up with bullishness and then to trade accordingly.
Yeah, very good. The NASDAQ is pushing lower. I'll just quickly, if you don't mind, I'll just share my screen, and we're probably going to have to just look at the pound US dollar as well.
Pound dollar is powerful indeed.
Yeah, it's been crazy. It's craziness. Craziness.
It's powerful, but has it been tradable? Has there been good setups?
Yeah, not today, not for me today, but on Thursday definitely. I'll show you again. I'll show you again. All right, I just quickly wanted just show you on the NASDAQ. We did move lower. I did see this resistance level. I didn't want to trade it because the way I explain it in these sessions, I need to trade consistently with that. And that is, I need at least 2 out of these 3 time frames to line up and show in the same direction. So we're now getting it, like all 3 time frames are bearish. So now you need to find a resistance level, which is not going to happen right now. But that's what you only want to take shorts now, no longs, definitely not. But I execute the trade on the 1 minute time frame, and the nearest support or resistance level is way back up there. So we'll see if I can get anything to line up. But at the moment, it looks like it's just running away. Okay, so to go back to the pound US dollar, where was the pound US dollar? Yeah, was this tradable? I don't think today. I didn't even watch it today. I was having a nap. I told you, Walter. But this was Thursday. Michael, hey, Robert, nice to see you. Andre, I'm very curious to know whether you traded this on Friday. On Thursday. I'll just go into a little bit more kind of detail. This was very, very easy. The pound US dollar has honestly been really straightforward, and I don't say that very often. It's just been so easy to trade. Even though last week there was only really one day when this lined up, because, Walter, as I mentioned to you earlier, when we trade at this resistance level, I just don't like it. It needs to either pull back or break out, and then I'll take a retest. So for that reason, there was no setups, but Thursday it definitely lined up. And that was on the 17th. So if you go to the smaller time frames, I like to identify opportunities on the longer time frames, in the 4 hour, ideally the daily as well. But I would typically start with the monthly just to see if I can get some valuable information from there, like support, resistance, or whatever, like even ATR values and that kind of stuff. But the opportunity needs to ideally present itself on the 4 hour for me. And then, but my timing is always the 15 minute, maybe the half an hour if I can't get it on the 15 minute, or if the 15 minute I find is too, it's the body to wick ratio is out of whack. So you get pretty large wicks compared to the bodies. And then the 15 is tricky. And then the way to overcome that is to look at the longer time frames. It just smooths it out. It's easier to read on longer time frames. So anyway, so the 15 minute, on the 17th, if you look right, Okay, so this is overnight. If I just zoom out. Okay, so that was 3 o'clock. I'll just move this open. You'll see exactly where this is the London session, right? Okay. It's so simple to trade. It just comes off support, and on the 4 hour time frame, which you can't really see on the 15-minute, is the fact that you broke out of a resistance level and you are back at the retest level. So that picture is very clear on the 4 hour, not so clear on the 15-minute. But you know what you're doing. You got it on the 4 hour. This is now just a case of timing your entry. Now, I got spooked out by this drop here. I just did, okay, and my target was 1.28. Oh, come on, man. 1.28 was my target, which is not exactly the high. I think you can probably still see it if you look at my account history. If you look at the pound US dollar trade, you see the take profit 1.328. So 1.328 was the target, but I cashed in like half of it, which was annoying. As I said to you at the beginning, the reason for that is because I went into the session with this doubt in my mind of like, is it going to be like a Friday? Is it going to be rangy? Are we going to get a nice trend? And that really played with my mind. So when it came back down here, I was thinking that we're probably going to find support at this level here. And I went, okay, I'm going to, if this is the support level, I'm going to say get out over here, which is pretty safe. And it's almost like they were like, all right, the Jannie stop is there. Let's go all the way there. And it just took me out like, So I gave away half my profits. So it was up 4% and I took 2%. But anyway, that's the point of this is just to show you the entry of this trade. Very, very straightforward on the pound US dollar. Today, this is overnight. This is just overnight. You could argue that there was an opportunity, but when I see on the 4 hour time frame that you'll see that I've got this here on the left hand top corner, I've got this pips from high to low. That it just tells you how many pips it's moved. And on the daily, it's moved 130 plus the 23, so 154 pips, sorry. For the day. So we're getting really big ATR moves. I think the ATR is 134 at the moment. I don't have it on here now, but the 14 period ATR is 134. So we just keep like breaking those ATR levels.
Which is really good. I mean, the range is definitely expanded for GU, because I remember, it wasn't as high as this, like right before COVID, it was sitting at like 200 per day on average. And then it went down from 200 to like 150 and then 130, and then it went into the 90s, 80s range, and that's when I stopped trading pound dollar. So for it to be hitting like 130 is it's really nice.
Yeah, it's definitely. But the thing is, for me, I like to use the ATR as a potential take profit as well. Okay, because it's especially if so if you identify potential resistance levels where it can potentially go if you enter a trade, and you see it's like really like it's a bit ambitious, you're probably not going to get it in the session because it's like 160 pips, for example. Then and there's no real exit close by, like a resistance or level where you can say
like some sort of revenue schedule that day. Which is also risky to hold into that.
Yeah, so then the ATR makes sense, right? You can just get out at ATR, the daily ATR. Maybe look at price action and see how it behaves. But the point I was making is, if you look at this overnight candle, this Monday, first candle of Monday, and then that second one, that's already like ATR or close to ATR. So you're like probably 80-90%. If not more, okay, of your daily ATR. So it's just the opportunity is gone almost, because you already traded so far the moment the London session opens. So for me, I'm like, did you really have to do that? It's very different. It's very different to when you wake up in the morning for the London session and you write at a support level. You've got the entire daily ATR in front of you, and you're at a key level, no overnight moves. Then that's what you want. Okay, that's where the opportunity is, right? Compared to this. So for me, there was nothing today. I'm not sure if you guys. I got in at 18,030. What's that? That's probably the NASDAQ, right? Oh, nice. I hope short. I hope you went short, Robert. Obviously, you did go short. Yeah, that's a good spot. Yeah, so that's the pound US dollar. That's the reason why for no trades for me. But again, I'm not convinced about tomorrow morning either, because we've got this very strong resistance level right up there. If we can get some sort of pullback, it just depends on what the morning session looks like, the London session. If you do get a really nice pullback, but I mean, where's it going to be? You're probably going to have to, again, draw FIP levels. Well, I drew these levels here, okay? So that, I don't know if it's going to go back. That's a bit ambitious to think it's going to pull back all the way there. That's a long way to come down, especially in these type of markets where it's just really strong trends. So maybe if something can line up on the 15-minute time frame, really, an obvious support level, which is not obvious right now, but we're going to get some more candles, 1 hour candles and 4 hour candles before tomorrow morning. So hopefully a bit of a story can develop before that time. But then this 1.343 level is going to be in the way. Okay, so if you want to take profit, this is going to be the level you need. If you do get a long opportunity, you need to get out here. Okay, don't try to predict the breakout. I don't think that's good practice. It's definitely, but you're better off to
never try to predict breakouts.
Yeah, don't predict it. Let it break out. Let it break out without you. It will pull back. It's not going to move in a straight line, right? It could do, but in most cases, even on gold, like if we go back to gold here. On the monthly time frame, this is the January candle right here. It's just been going in one direction, but plenty of opportunity to get back in on shorter time frames. So it's not just going to, even if it keeps trending, you'll have plenty of opportunity to get back in on the daily, especially this level here, that pullback here. Okay, it seems like impossible. It did actually come back there. And this was in. This is in this month. In this month, April month, you had an opportunity. On smaller time frames, you'll get it again. There will always be pullbacks. Here's a breakout here. So there's a pullback. This is the breakout. You don't get a retest, but maybe on smaller time frames. Where would you, like this pullback here is interesting, Walter. Like if you see this pullback on gold, where would you target a potential pullback area? Because like this is what I'm saying with gold, with the pound US dollar as well. In really strong trending markets, you can just expect shallow pullbacks. You're not going to get those deep pullbacks. It's going to be more, shallow pullbacks. But the levels where it can potentially pull back is not always clear.
Yeah, I mean, I traded that pullback. So a lot of the time, the pullback targets into like 4 hour fair value gaps imbalances, or even daily imbalances. So if you like, just put a box where that pullback is, and you go to the 1 hour time frame. I think it was in this case.
I don't think I can do like over here. You mean the zone? Yeah.
Yeah, that zone.
Okay, we go to the 1 hour, right? Yeah, you see, but this is very clear. This is very clear. Okay, so get it. Yeah, it's pulling right back here. So.
And then it's like, so you have your prior lows, and then you have your FVG right below that. So it's just a confluence of that, and also of course the 15 or 30-minute cycle. So if I see like a complete trend cycle into a 1 hour low, a 4 hour low, or even the FVG is near those lows, that for me is where I take my profit. So, but then it's just being cautious as well. Like I'm not overly ambitious on the short side. I'm like 1 to 2. If I can get a 1 to 2, that's fantastic. But then in the long side is obviously where I aim for a bigger target if the opportunity presents itself.
Okay, yes, there's a question asked 3 minutes ago. Like gold short setup, 34.30, 34.35. I don't.
It's getting there. It's getting there, but not yet. Selling right now would be like stepping out in front of a car moving at 40
Yeah,
miles
it's a
per
bit.
hour.
This is very dangerous. There's no clear reversal signals for me. Definitely not.
Nothing whatsoever. So actually, I'm more interested in buying. So I can share my screen. I'll show you what I'm looking at now.
Yeah, sure.
This is where like really removing any sort of predisposition from your head is so important when it comes to this kind of markets. So initially, yes, I was like potential reversal heading up. However, what did we see take place at the start of this session? I saw the market traded right into this 15 minutes fair value gap right there. Retested this bullish order block right there. Right. Now, this was a completion of a bullish cycle, right? So this was some sort of a contraction for the market reset long. So actually, what I'm looking at now is if this next 15 minutes candle creates a swing high, that for me is another buy opportunity. So in that case, what I'll be looking to do is to do exactly what I did down here, which is to buy, stop goes below the low, and I'm simply going to be looking for a 1 to 2. Right. But in this, I don't know if a 1 to 2 would happen again. If it does, like, it is what it is, right? Because again, like I said, I've removed any kind of predisposition from my head. Right now, the only next key level that I'm anticipating gold to get to is 3,500. And there's a lot of room for that to happen. It's very feasible for it to happen. Seeing the type of market we've been in, not a lot of economists thought gold was going to break 3,000 this year. Yeah, we are. So don't just jump to sell just because price is overextended. Like logically, yes, it makes sense, but the market doesn't run on logic all the time. So that's why it's like you just gotta be careful with that. So unless there is a very, very clear sell signal. What I mean by clear sell signal is this. So I'll give an example of the previous overextended move that I shorted. So this is it, right? So in this case, we saw the market was rallying for days on end, right? And for me, it was just long. So these were the long opportunities that presented itself. The market gave an initial high, secondary high, long from the initial high, stop goes below the low, and that was a 1 to 2, right? And then the market extended. It wasn't until the market obviously gave this aggressive push. So a lot of the time, reversals are before a reversal happens, you're usually going to have some sort of an aggressive move to the upside. In this case, there isn't really. You can see this as aggressive, but this is also very sluggish price action. And then after that, there's usually a break of structure to the downside. So this happened I remember this on Wednesday morning. Market reversed, break of structure to the downside. Area of interest to sell in this case became this. Basically, this like from the swing low to the swing high is my area of interest for selling, right? And then after that, we're simply shorting there. Stop went above the high. That was the trade. Okay. Now, in terms of targets, so in this case, the 4-hour imbalance. So what Jannie and I was talking about earlier in terms of targets when you're selling against a predominantly bullish market. In this case, the sell target was the 4-hour imbalance. So if I just show you, so it looks like this. So it's a 4-hour fair value gap right there. This was a very balanced market, but the next point of imbalance started at the fair value gap. So hence why that made sense as a profit target to the downside, right? So this was one trade. There was another trade that presented itself in the London session on the same day, right? So we have a full bearish cycle. Then the market
Walter, sorry, mate. Sorry, mate, to interrupt you. Can you have a quick look at Bitcoin? Just quickly, can you see that?
Oh yeah, I was waiting for this. Nice. Cool.
Yeah, Bitcoin is this is a nice little trade if you want to go trade Bitcoin. That's a very nice little setup. You can see even on the 4-hour, you had that previous bearish candle. This one is definitely breaking it out. It looks pretty solid.
Yeah, this is a good trade. So again, is what I was mentioning earlier as well, where long is the better bias, and a break above this high, a new swing high created. So again, this might happen within the next 30 minutes. But when price creates a new swing high, then I'm simply just going to go long from this order block. Stop goes below the low, and then I'm just going to be targeting these highs. So could easily get a 1 to 2.
Sorry, Walter, I know you were in the middle of something.
No, it's all good. So yeah, so as I was saying, like with reversal trades, always wait for a very clear sell signal. So in this case, like aggressive, so a very aggressive move to the upside, followed by a break of structure to the downside. And then after you've confirmed your break of structure to the downside, then it's incredibly easy to just take the continuation of that bearish break into some sort of a 4-hour, 1-hour target. So just, yes, with regards to what we're seeing now on gold, the question is there a bearish signal, a bearish break to the downside? And the answer to that question is no. So therefore, there is no valid reason to sell, because of course you're just going to be keeping your fingers crossed, trying to get the high of the run, which is an egotistical thing to do. And the thing is, the market isn't going to pay your ego. So never trade off trying to like get the highs or the lows. It's just pointless. A lot of money is lost trying to get the highs and lows. But yeah, live tutorials, no worries. Any other clarifications needed, just let us know. But yeah, Bitcoin is still bullish beautifully. So at this point, it's a waiting game. So yeah, hopefully we can get a nice, because London, I mean, Asia today missed something. London didn't really give a trade today, to be honest with you. So I do believe we are potentially going to get something in New York. So what that will look like is after the market forms that high, a deep retracement into this order block would be what we're going to be looking for to go long. If that happens, you can just buy with your eyes closed, and most likely you are going to see your target being hit at these equal highs.
Yes, I think, well, we spoke about earlier for those of people who are just, hi, Craig, nice to see you.
Hello, Craig.
Bitcoin is definitely now breaking this, this 88 level. So I think what you just mentioned about a pullback to that retest level, if you can get that, that would be great. But it is, I think the probability is really high for this to go to the 92, 94 area. Not today, obviously, but that is definitely the area. That's the major area of resistance. So if you're not long bullish,
with Bitcoin, you have to take it piecemeal, one bit at a time, right? So it's like it will get there, but the question is, what would it do between where it is and where it's going, right? Like a good example of this was, let's say, for example, you shorted this range. So this is a good example. Right. So when Bitcoin was like within this range and it had this high, of course, if you were buying, right, you're thinking, okay, it's going to get to 86 or it's going to get to 88 or 89 or 90. But then what happens is, if you didn't take your profit there, let's say, I don't know where you bought. If you bought, fantastic, you're in a good position. But let's say you bought in the middle of the range, then the market would have hit the high and then made an aggressive pullback. And Bitcoin actually tends to do this, right? It tends to do these kind of moves. So what I will not be surprised to see is if the market were to take out this high right there, so the high of 88.8K, and then after taking out that high, it makes an aggressive move to the downside. So any sort of like late buyers that came into the range that might be looking to hold to 92K, that move will probably shake out those late buyers. But obviously, if you're an early buyers, you bought somewhere down here, right? And then you added on somewhere down here, then you're probably still going to be in good hands. So it could make an aggressive shift, shake out any late buyers before, and then maybe even hang out, create a new range. Because as you can see, like Bitcoin, a lot of the time, it tends to move for a period of time in ranges before any sort of like an expansive run, right? So look at this, so it accumulates, and then it gives that move to the downside. So Bitcoin has this tendency of doing this. I won't be surprised if it takes out the high, comes back down, and then it just moves horizontal for a few days before that next big run to 92K, which is
Yeah,
gonna happen
but
at some
for
point.
now, I'm really enjoying this break to the upside because I'm in a trade, right?
Yeah, yeah.
I've been in the trade for
So right
now
now you're
like
seeing
for a week, just
that
over a week
nice.
now. This is
You've held
beautiful.
this
This
position
is
for a
beautiful.
week, which is really good.
Yeah, I think for me the first signal that the bearish run is over was is the monthly support level and that reaction we got. It was a very sharp reaction, which took out, because there was a really sharp drop to that support level. I know it missed the support level by like $500, but if you look at that reaction, it took out nearly 80% of that drop in a very short period of time. And like that is your signal. It's not time to buy it, but that is your signal that you need to like definitely get all the shorts out of the table. And then it basically just came to retest that low, and that was it. That was the low. You'll see it on the 4 hour, much clearer on the 4 hour time frame. It's not that clear on the daily.
No. Of course, I see it. I see it very clearly.
Yeah, you see. Yeah, so that is that was that little spike. You see that big drop right to that support level, that horizontal line you've got. Yeah, that's the monthly support. That's the monthly support, even though this is the 4 hour time frame. That support level comes from. It just came to retest it, and that was it. Yeah. And then you get that confirmation, that double bottom, lower high. I mean, that's where you need to. That's that's where you need to get in. So anyway, yeah, I wanted to just have a quick look at the NASDAQ, but unfortunately, okay, now potentially maybe in the next 15 minutes we can get some sort of pullback to a support level, because it did form a support level. Now I just need to get a pullback to that level. We'll see if I can get that. But yeah.
Oh, are you sharing your screen or?
Yeah, I can just show you exactly what I'll be waiting for. Yeah, sure.
Yeah, I know the comments are quite active today, which is good.
Yeah, Craig, I don't think I've seen you before. Maybe you only, because I'm in session 2, session 3 most of the time. Okay, let's have a look. Oh, this is so beautiful. Oh man, like when this happens, I'll tell you what, I'll be honest with you, man. I was in a lot of pain the last kind of 3 days when it was just doing this. Like, please break out of that range. And now you see, this is now exactly what I'm saying. Like, you get the breakout, you don't trade the breakout. Now, okay, we've got a couple of hours left, and then when this 4 hour time frame closes, we'll see what happens, how far this goes up. But I do want it to come back to this level. And then I will be all over it. I'll be all over it. And then I'll enter another position. I took my second position off. For those of you who don't know, I took it off. I took it off at this resistance level.
Which is good. That's fine. That's good practice to take profit. Because then if you get something else, if price does pull back, that's like an easy re-entry for you to add on.
Yeah. Yes, exactly. And I can it's not too late, okay? Because it's still in play to add another position. That's still in play. It just needs to close above there and pull back, very similar to your levels that you've identified. Yeah. In fact, it's pretty much identical. Even though we have slightly different approaches, it's interesting when we look at the same levels more or less, but the approach is not exactly the same, but we still wait for more or less the same thing. At
the end of the day, a lot of it is, if you're looking at price, the one thing that could differ is linguistics, calling two similar structures different names.
Yes. Yeah, it's different. We just call them different things, right? My name is Jannie, but if someone says, hey, I'll probably still look. My name's not Hey. Anyway, I wanted to show you on the NASDAQ. You see, this is the resistance level.
By the way, gold is ready for potential continuation.
Is it? Okay. Well, you take over. I just wanted to show you, this is the resistance area you want to wait for.
I'm just going to take this trade.
So 17,976. If it gets to that level, you want to get a rejection from there. That's where you can look for potential opportunity to go short. If it does go there, then I'll just take the screen over. But over to you for now, Walter.
No. Sorry, carry on. I'm right now in the middle of just calculating this.
Oh, all right. Let me do that. Okay, so we're approaching. This is the level. Robert, I know you are. This is futures, by the way. This is not CFD. So if you want to do scalping, the futures, but you can execute it on CFDs as well. Same thing. The actual price levels are different, but they move. It's identical moves. Exactly the same thing. Okay, now let's have a look at Bitcoin. Right, so there's that breakout. I don't know if any one of you took that trade. You can enter. Like if you're happy with a bit of a pullback, nothing wrong with that. But it is always for me better to wait for that pullback and then trade off that level. So the level that we spoke about, Walter, is this $94,000 level. That is the key resistance level. And for those people who are short, you're waiting for a pullback, Robert. Yeah, that's the right thing to do. Yeah. So this key level, even the people who talks about the 50s levels and so on, this 94 level would make a lot more sense to start to look for shorts. Okay, but you still need to look at price action, multiple time frames, and that kind of thing. Okay, once we get to that level, because it could just break out of that very strongly and then continue. So you just have to take it one day at a time, look at the candles, and what's busy forming. You have to trade what's busy happening. You have to look at what is actually happening instead of what you believe is going to happen. Yeah. Does that make sense? So
that's so important.
Yeah, I'm still on NASDAQ. What are my accounts? What? Are you did you keep that trade open? So you must be in good profit then. You're not getting that pullback right now. But you can see we bearish, we got that breakout on the 1 hour, and we definitely bearish on all 3 time frames. So now we just need to get in something that makes sense on the 1 minute. Because remember, when you execute a trade on the 1 minute, it needs to be like a setup individual, separate from what you can see there, even though it's in sync with what you see there. Does that make sense? So it has to, if somebody says, why did you enter this trade on the 1 minute? You need to be able to give a reason. So, well, it came off a resistance level, as simple as that, but it's in sync with what's going on the longer time frames. Yeah. Well, those are the only markets I look at. I only look at Bitcoin, the pound US dollar, and the NASDAQ. So the only trade I placed today was taking one off the table. That's all I placed. I didn't actually place any trades. The pound US dollar would have been so nice if it just lined up this morning.
Taking profit is the best trade to place.
Yeah, it's not bad. I enjoy those as well. They're not bad. But the pound US dollar, I don't know if you guys are looking at, you don't look at the pound US dollar, do you, Walter? Or?
No, I don't. No, not anymore. I haven't traded that in over a year now.
Right. So, okay. So I assume you just moved away from Forex?
Yes, did you move away? So I just focus on gold dollar and Bitcoin dollar. Because they're just more rewarding for me, and I do a lot less work for that reward. Yes, whereas with Forex, I did a lot of work for little gain.
Yes. No, I fully agree. I also pretty much moved away from it. I'll only focus on the pound US dollar. The rest is just because the pound US dollar it moves. It has decent ATRs, and the levels are respected. It's just that's the only pair I'll focus on. But I definitely also moved away from the majority of Forex pairs because it like you just said, it's a lot of time. It's 80. Well, let's go for 90% frustration.
Yeah.
It's just you always stuck in a slow market. You just always
and then when it moves at the most bizarre time. It moves on It like consolidates on Monday, Tuesday, and it moves on Wednesday, Thursday, and then Friday it just does absolutely nothing.
Doesn't want to move.
And it's just like, it doesn't want to do anything.
Fully agree. Yeah. So but it's like that's why I enjoy the NASDAQ, because the NASDAQ, you know exactly when you can expect the volatility to come into the market. That is at the New York Open. I mean, like that's just when it starts to happen, and you can trade for the first hour and a half, and then you're done. If you want to do short-term trading, so the NASDAQ makes a lot of sense to me. Gold is also good. Bitcoin has been, quite honestly, I've like a massive disappointment during, especially considering, what's going on in the world right now and the big trends we've had. If you look at, for example, look at this is the dollar index. It's just been melting since the beginning of the year. Just clear one direction, no kind of ranges. We had a bit of a pause here, but it's just melting in one direction, right? And it's not even respecting the support level. There's not even a little bounce. We went back to 2008 to see how price behaved, with the last market crash in 2008. And at least it respected this support levels. It was at least bouncing off a bit. It's just not doing that, right? So with the dollar melting like that, and things like, again, gold just moving in one very clear direction, very big moves on Forex pairs, strong trends, big moves. If you look at it from that point of view, Bitcoin has been a very big disappointment. I feel like it just hasn't done much. But apparently, I say apparently because I heard this. This is a YouTube video I watch, so I don't know. And there's some guru, I don't know, who said that there's a 90-day delayed correlation between Bitcoin and gold. I don't know if you've heard of that. So this is now probably 100 days.
I mean, I've never heard of such a thing as a 90-day delayed correlation.
Yeah, neither have I. So that's why I say it
sounds very arbitrary.
Yeah, I agree with that. But they use a couple of examples, but I think it's very poorly correlated. I don't think it's something you can really go by. But I did feel that the monthly support on Bitcoin is crucial. It has to hold there and has to move away. And this is like almost like Bitcoin's last chance. Like if it can't hold this structure here, and it obviously it has it's moving away from it. But at the time when it was doing this, it's like especially when it formed that higher low and going up and forming this range, if that was to fail and break the structure, goodbye Bitcoin for a long, long time. A long time. I'm not saying it's going to just crash. I'm saying you'll be stuck in that position. It's just going to struggle because the structures will just be so messed up on the monthly because you lost the support level. And then the whole uptrend is in question, and it just would not be a good place, not a good market to focus on, I don't think. It would have been very difficult to focus on. But luckily, that's not the case right now. We are moving away from it. We are making new highs now. Not new highs. You know what I mean? In terms of a turning, like it's turned now, and we are definitely getting past border control over here. I know that the actual high is here. I'll explain to you just why I picked that level. So the actual level or the high is 88,700. Let's call it 88,800, right? But the reason why this is the level I drew was because this actually comes back from a Fibonacci retracement level that I was looking at while I was looking for a short, which was over here. Oh, it's too many lines now. This is 61.8. Okay, I'm just going to delete some lines so you can see what I mean. I'll do this. Okay, but this horizontal line that's already drawn there, you can see it's bang on the 61.8. I can delete that. You can just see that's where I got it from. Yeah. So that was the level that was identified when we were in this bullish correction wave. Don't know if you can remember that little correction wave that we had. Over here, we had that correction wave in a broader downtrend. So this was the resistance area, the 61.8 Fibonacci retracement level. So that was the level. So we broke below this this range, and then we got this was the tariff announcement. So we got right back to that level, and it rejected, and we went all the way back to the monthly support level. And that's when this picture started to turn and change into the opposite direction. You get the double bottom, etc. But this is still the 61.8 level. That's why I've got this the 87,900 and not the 88,800, even though that is technically the correct level. Does that make sense? Yeah. So, but this is the 61.8 is very weak. It's not a strong level anymore because it already moved significantly off that level. So this opportunity is gone. This is already played out. Now you're reversing back up to it. So this is a very weak level. That's why I feel it can definitely break out of that level. It's just that 100%. At that level, yeah. So at that level, I would rather wait for it to as I've said, break out and give me the retest, or pull back. Now, currently, we're breaking out. So it's all looking good for Bitcoin. But anyway, the point was just... Good. Yeah. But yeah, just to get back to the Forex space, I just look at the pound US dollar, and that's it. You get I think especially on the NASDAQ, levels like support levels, resistance levels, they're so much more respected. They really...
So like NASDAQ, and even like US30 as well. I mean, these things are
US
very
indices,
liquid. They respect technical levels really well, and you get more of a consistent ATR. Whereas with Forex pairs, the ATR is not consistent. You can have weeks where the ATR is trading at 50% of what it usually is. And then in like a few days, it expands to like 130, 140 pips per day. And it's just like, it's just very, especially, I mean, it depends on the type of trader you are, right? Like if you're just interested in long-term swing positions on like euro dollar and pound dollar and the usuals, then yeah, of course that could work. But if you're just looking for day trade opportunities for like pullbacks into high volume areas, then it's a lot more like if you look at pound dollar today, it's like there's been barely any sort of significant pullbacks to have taken a good trade in line with the bullish trend. Like that's, and again, like for me with gold, it's just more consistent.
Yes, I fully agree. I mean, I've been trading this just Forex pairs for just many years. I started in 2004, so that's a long time ago, right? I was still in my early 20s, man. I'm a trader. I didn't realize how difficult it is and how long it's going to take. Honestly, it's easier to become a surgeon. Yeah, I think so.
Exactly.
It's quicker as
well.
Well.
They come to me like they want to be a trader. I'm like, just do something else. Unless because I've been doing this myself for like 8 years as well. And you definitely need to have a level of interest, commitment, and work ethic and grit, and also like an ability to pick yourself up, through after you've been in the market.
Yes.
You gotta be able to do that because it's definitely not for the weak of mind or weak of heart.
Yeah, and like if you think you're going to do this part time to make some extra money, I promise you have a better chance to do some part time. Like
man.
Yeah, for sure. No, and it's not even a joke. It's not even a joke. It's really, really difficult, and you really need to focus on the craft and not the money. You need to forget about making money. You need to focus on doing it properly. Yeah, the job.
Your interest needs to be in the craft. Like you really need to fall in love with the market and the underlying dynamics of it, and the discipline of it, the human element of it, the emotion, the psychology. Like every aspect of that needs to interest you. Like I've learned so many strategies over the years, and it's like that's when I can see the market the way that I see it. Because at the end of the day, like every trader sees the market in a way that is unique to them, and for you to cultivate that sense of uniqueness, you need to look through a lot of data. Like it says, you need to have 10,000 hours into a pursuit for you to become a master of that pursuit. And 10,000 hours is not something that happens just like that. It's something that happens over time, through the ups and through the downs. And one day you just wait, you just look at the charts and you're just like, oh shit, like it makes sense. Like it just it just comes at you. Oh, but just
sure.
a bit of an update. I know we have to wrap up very soon. So just in terms of gold and Bitcoin on my end.
Yeah.
Robert, have a good day at your work. Enjoy. All right, so just a quick final update on these two. So I'll start with gold. So I didn't take the short in the end and I didn't take the long in the end because the short is actually imminent. The reason being is because, so you see this pattern is an evening star formation. It's an evening star formation. It's a trap formation. So what this did, it validated a prior move. So it gave that sort of like bullish move to the upside, gave a free X, but then I was like, one of two things could happen here. Either price delivers a higher high trade into the range and gives a break of structure to the downside, or it breaks to the upside, retest and rallies. But although it looked like it broke to the upside, this candle trading back into the range as strongly as it did, that alerted me that, okay, this is not a bullish setup. This is most likely going to trade towards this low. So this is going to be the first low it trades to right here. And then once it does that, that will be technically speaking, a bearish break to the downside. And then when that happens, I mean, I'm going to be asleep for this. I'll trade whatever I see in the morning, but whenever happens, it's a simple setup for a bearish continuation where you anticipate a retest of that range, and then you're looking to go short to the downside. Now, for a short setup, at a maximum, what I would aim for, so there's a lot of juicy targets to the downside, but this low, where this imbalance begins at 3.36, this is the most reasonable target. Like, the market is pretty balanced trading into these highs. So if it were to come back down, it will come back down to the most area of imbalance, which is going to be below this low. So anywhere below this low will be a good target, but this low would be obviously the safest target because again, you don't know how far price will extend below. Price could simply tap into that low and thereafter give a continuation to the upside. Yeah. So when trading against a very dominant trend, my advice is always to take profit at the safest point. Nothing more, nothing less. So that's my update for gold. Gold is bearish, but it's beginning to be bearish, but it hasn't yet given that 15 minutes confirmation. And then as for Bitcoin, I think this setup is very much the same. I'm anticipating a pullback this bullish order block, right? From that bullish order block, I'm going to be looking to, I'm actually going to set a pin in order on this and just leave it there because then I'm anticipating a reaction from the order block towards these equal highs above. So that's the setup I'm anticipating on this. So it's a very simple, say, long setup. But yeah, that's it from my end.
Awesome. Okay, I'll just remove that screen. Excellent. All right, Walter, but it was nice to speak to you again. We don't get to speak to each other too often because of the different sessions. So it was, it's been an honor. Yeah, and a pleasure. But have a great day. Thanks for watching, everyone. The next session will start. Yeah, likewise, man. But the next session for you guys watching will start in about 10 minutes from now. So from us, take care. Cheers.
Take care, guys.
Hello, everyone. Hope everyone's good.
Hello.
Aymane, great to see you. Thanks for joining. How was your weekend?
Actually, pretty good. Long weekend. It starts from, let's say, Friday. So, and
Yeah.
yours?
Hello, everyone.
All right, Igor. Good to see you. Yeah, I was busy working all
Me too,
weekend. Really,
too.
wasn't really doing anything else. Igor, how was your weekend? Igor, are you with us? You okay?
I think there is a
Hello?
delay.
Yeah, there's a bit of a delay.
Yeah.
Aymane, what you been looking at this week? You got your eye on anything?
Actually, let me share.
Yes.
Like, and then I will
Little bit
explain a
better.
little bit what's.
Yeah, sorry, Igor. I think there's a bit of a
Yeah.
delay. I don't know what's going on.
Yeah. There is
Yes,
definitely
there is some
a delay.
delay.
Well, that'll be fun.
Yes.
All right, Aymane, it's all you. It's all you. Let's have a look. See what we got.
Okay, perfect. So let's start first by like just give a quick, let's say, update about what happened last week. It was actually slow week compared to the previous weeks that we saw. So let's start with the 4 hour. So I remember on the last Monday session with you guys, like the price was somewhere here. We talked about this supply area here, took this previous week, closed bearish. We talked also about like volume was really increasing here. When we touch this supply area, like the volume start to die, and we can see this a little bit on like the candlesticks and also here on the volume side. So I was like expecting a reversal, but yeah, I was expecting a reversal to where we have a demand right here. We could tap into this area right here. It's a weekly and daily area of interest, or we could come back here, take this week if this lower week here if the sellers are in control. We talked also about last week about this double top right here that really play out very well. It was like going slowly because of like we had a holiday week, like Friday the market was closed. So we talked last week also about the, let's say, the game plan. I talked about the game plan for the week. So actually Tuesday, same thing, scalping. Wednesday, Thursday, I took exactly the same setup. I took a couple setups, but I will go to like mainly what the main setups, let's say. So Tuesday was more of scalping, and let's show the Wednesday setup, which I was stopped out by a couple of points. So Wednesday setup, it's here. I remember it's somewhere here. Yes. So the bigger context, as I explained before, 4 hour supply we had here. We had double top on the 4 hour. We are breaking structure. Let's say the sellers are more in control. So the idea of the trade was simply this supply zone here on the 15 minutes. This one here. So we had this supply right here, and I was simply waiting for the price to come back, test this area, stop. Actually, I was a little bit aggressive. That's why stop loss, I put it based on the 5 and 3 minutes. So I put my stop. I enter somewhere here, and I put my stop a little bit, let's say, aggressive. It stopped me out, and it was like normally here this low or at the closer of this candle. Let me show the footprint here, what the footprint look like right there. I think it's this one. No. Yeah, it was here. Yep. Just one idea also of the trade. Can you see the footprint, Paul?
Yeah, thank you, mate.
Yes.
Yeah, okay. Just like before I show the footprint, just I forgot to tell also the idea behind the trade, except of the supply, because the context always matter. So we had like a, let's say, a supply area right here. As you can see, you know me, I trade this type of area. You can see this bearish move here. We took this previous week. We closed bearish. We had continuation. So for me, this was a supply area. So we were in a supply. We create a fresher. I call them fresh supply. And here we had like, I think, news about tariff. China said something related of like the ball is on USA hand. We are open for discussion, and we had this big push to the upside here. Yeah. But on the footprint, it was more of, let's say there is nothing on those candles, like just a couple of 20 cluster. When you see a bigger move like this and it's empty, let's say 20, 30, 40, and after that, the same pattern, the volume died. So for me, when I saw this move here, I was more to take sales here. The idea of the trade was really good, but just the stop and the entry. You can see here like big push to the upside, big volume, and then you can see here that the volume really like decreased by 2 times, 3 times, from 9,000 to 3,500, 2,000, 1,620. And at the same time, we were watching, let's say, bigger clusters like minus 652, and then we see continuation, big cluster continuation. And this is the fresh supply that I draw here with this minus 273. I put my stop, I think, on it. It was more aggressive setup, but it was good trade. So this was the setup for Wednesday. Thursday, it was actually the same setup, the same thing. Thursday, sorry, let's take this off. Thursday, it was here. And this is Wednesday. Yeah, here. Sorry. Yeah. So Thursday actually it was, and this is important because on Thursday I was looking more for, let's say, for buys, because I had really this zone right here, demand. I had another zone here, as you can see, took this previous week, closed bullish, but on the 1 hour we had this area right here. You can see, took this previous week, closed bearish, continuation. So it was a little bit of mixture. Of course, the sellers are more in control because we couldn't break this supply here in the London session, pre New York. So I was more of, let's react to the price. So like let's say this candle here was more bullish, but few minutes before the open, the NY open, we closed bearish and we had continuation. So we took this previous week, closed bearish. I don't trade the open of NY session, so I waited for the next 15 minutes, and then this was my fresh supply area. And then I built the context for it. Okay, we had a supply right here. We failed to break. Yes, there is a lot of, there is a demand here, and it was another demand on 1 hour. But I was more open to take sales. Went to the 5 minutes, waited for this supply here. And then I enter based on the 3 minutes. Here, this time, I was a little bit, I don't know, lucky. So I was not, I didn't, yeah, I didn't get stopped out. I enter here, take profit lower, actually a little bit lower, and it was same setup. What I saw in the footprint also same. It was here and it play out really good. So this is the main setups that I took this week, plus a lot of scalping. I did a lot of scalping also. So yeah, so this week, what I am looking for this week, again, open to both scenarios, because if the sentiment will change, we could tap into this area, maybe a failure here, similar that we get here, and we got this failure here, double top. We could get another failure, come back to this range, or if the sellers are stronger, we could come back to this demand or break lower. So both scenarios are possible. Today, Monday, I don't trade. I had I draw my zones. This supply here was respected. I think 2 weeks ago we talked about a pattern, or last week, about when the market is trending from the Asian session, and let's say 2%, 2.5%, or in this range, let's say, most of the time NY session we have continuation. There is few times that we are really going higher, or in this case we are creating lower lows, and on NY session we will create let's say new high. So we had the same pattern here today, Monday. From Asia session here, we are pushing lower, London pushing lower. So NY session, pre-New York, we had test of the supply right here. And then we had continuation. And if I was trading today, like I would be interested to take this fresh area right here that was, but we didn't touch it. So we had this also here. We will see. Oh no, sorry. We will see how the price will react to it. But the main idea of this trade here is to take those lows here. Let's go back to the 4 hour. Yeah, this low right here. So it was taken now. So now we could see a small, like let's say short-term buyers to come to those supplies right here. Otherwise, the 17,474 is a really good place to buy. But is it to buy to target those highs? I don't think so. It's my opinion. But yeah, it will be interesting this week. And yeah, any thoughts about the analysis?
Yeah, I mean, you talked about the different possibilities for the price action. Just retracing upwards briefly on its continued journey to prosperity. It's so difficult with what's going on at the moment. Choose my words carefully. So you know, how is there anything you're looking to some news or some other triggers, or with the footprint or anything? Are you looking? Would something tell you that, you know what, I'm going to wait for it to come up to this level, or what would make you be more conservative and just expect it to come up a little bit? Is there a process you've got for determining where you'd be looking to enter based on the current market conditions?
Actually, like it's like I'm, let's say, scalper or like short-term intraday. So I am most of the time reacting to the price. So like I can like sit now and explain some couple of levels that I will be interested of, but maybe when the price is there, I will not take a trade because simply I didn't like what I'm seeing on the footprint or how the candles are behaving. So yeah, the outlook, let's say, it's here. There is a couple of zones, but I'm gonna take trades from there. We have, let's say, I have to be like with you live to see if I would enter or not, because for me it matters a lot how the price, when the price is coming to the area, it matters a lot how the price is acting. So yeah, the area for me can attract or repel the price, but also the price when we have an area and we are waiting for this for the price to come back to this area. This is really important for me, because if I see like strong buyers, or I see like the price action like below this area, we are slowing down. So for me, like I will not take those type of trades. So
yeah, so you'll look to see as it approaches. You'll look to see how it interacts, how the battle between the buyers and sellers, obviously, whatever, right, plays out. And then if you see the sellers winning, then that's where your short entry would be. If you think that it's going to progress higher, then you'll be looking at the next level. Yeah.
Yes. Exactly. Yeah, exactly. Right. So
cool. Just trying to pick apart the secrets of your system.
Actually, there is no secret. There is just like let's say A+ setup or a little bit intraday setup. Is just area supply or demand based on, let's say, took the previous week, close bearish or bullish, draw the areas and just wait for the footprint, see if there any absorption area failure. Also, I see also the size of the candles. So the size of the candles always matter, because when you see a big push and then no continuation and then volume die, so it's a lot of signs. I don't need to wait, let's say, for break of structure to understand, okay, now we are bearish. It's more like it's not like I am genius, because sometimes it plays out, sometimes doesn't play, to be honest. But it's more like, okay, there is few things, that's absorption, size of the candles, volume, footprint. You can understand, okay, we are swifting from, let's say, buyers having control to sellers having control. And sometimes when I find it difficult sometimes, because when you are talking, let's say with someone first who is not open, or he is more into structure into this, and you tell him, let's say this method, like, oh, you are not seeing break of structure, you are not seeing, but I see, like, there is, like, for me, it's sellers are start to take control, but him, let's say he's seeing, like, let's say higher highs. So, and also, like, it's simple, just areas, wait for 5-minute time frame, 3-minute time frame confirmation, wait for, let's say, buyers. There is big clusters for buyers, let's say, but there is no continuation. There is more of, like, let's say, they are not moving. So you interpret the footprint and the price action in a way that you build a general context. So yeah, so it's a mix of price action with the volume.
I think we were all talking about this last Monday,
Yes.
and just it doesn't, right? So yeah, there's no secret, sure, okay. I think so. I think the issue is, of course, so some people will have different thresholds for entering, right? Now, obviously, there are many traders which have to form these reversal patterns, which most of us trade off, right? So you have to have these front running. Now, are these people, I've called them kamikazes before, right? Which I don't think is particularly helpful, because in what you're describing, of course, is, these people they have different insights in order to trade those reversals or front run those reversals, right? So they do have, well, hopefully most of them do have an insight, and of course, whatever that is works for you. And we were looking at last week, we were just looking at basic divergences with open interest in Bitcoin has largely predicted what Bitcoin's doing at the moment, right? And that makes perfect sense. But I think the reason why I use the word secret is because there is some people who do just front run patterns, and they'll just buy this because it's the most logical place or whatnot. And that is, of course, just this. So as long as you have a system, as long as you have the insights which are quantifiable, which you can then trade off, then it's fine, whatever. But if you realize you're just doing this, then that's the problem. And I think that's why I was picking a little bit about what your process is, because I'm trying to just prove to people that this isn't just like, sure, okay, maybe you say you're not a genius, right? But your process might be genius, right, to other people. So, that's what I'm saying.
Yes. Yeah, thank you.
Nice. So, guys, I watched the news. So last 24
Why did
hours.
You do that? Why did you do that?
Because I was so shocked, because this movement during the Asia session, because the all major currency pairs just went up against US dollar, euro dollar, British pound dollar, everything went. And I don't like when I see a strong push during the Asia session, because it's not normal for our traders, because like I said before, based on statistics, usually the average true range during the Asia session should be 0.2%, 0.2 daily average true range in the last 20 years. So now we have one full daily average true range during the Asia session, and for me, it's not normal thing. And then usually that day can be very choppy and very critical. So I think that all this push that we see right now is the push of Donald Trump to decrease the interest rate a little bit earlier, which pushed the market in another side. And right now, I try to figure out how to trade, actually. So let me start from the beginning. First thing that I will do right now, I will go to create one trade, which is a little bit, I can not say scalping, but it will be the trade that I just want to test. Am I right based on my previous experience? So I will put one trade right now for British pound dollar. I will buy British pound dollar right now. I will just hope you see me. Yes. So what I'm doing here, I will just show you why I'm doing this. Even I a little bit change my strategy. This is, I will put something like this, and I will show you what's happened in the past, and only because of that I'm reacting right now. So I will show you my special chart. Just a moment. I'm going to the different platform. We will see very, very soon.
The anticipation. Stop it. You're teasing us, Igor. Come on.
Yes. So I will show you first one thing. It's very important. And this is the offline chart. I will back in the past just to show this. Even this is nothing on the chart, but this is the Bermuda Triangle for myself. This is the moment in September when we reach this area. So what's happened then? We had price movement from the 1.336570 to 1.3830, something like that, something as we can see right now. And what's happened then? The price went from the one price level to another, I think more than 15 times. And it was the one moment, it was like this. 1 hour, we are, 50 pips up. 1 hour, we are 50 pips down. And then it was the really something that for me, it was frustrating. Even the relative strength index wouldn't be some kind of good indicator in that moment. And I remember that feeling. And I see the same reaction right now, the same volume profiles, the same reaction in the market. And I see that price just oscillate in this area. And what can happen in my perception, how I see this. So we are right now, it's 23.6% of Fibonacci retracement from the today's high, and today's high is 1.342. It was the one of the highest level from the last year, and price is right now here. I think the big players defend this area, but the problem is we don't have momentum to downside. On the other side, euro dollar is above the last year high, way above. And right now we have the similar thing. We reach 1.1570, and we are just touch the half path of the price for today. So this red line is the middle line from the today highest high, today lowest low. And we just touch that. And you can see someone defending right now. We have some very small push upside. Of course, it's nothing. But right now, because I see that on euro dollar and I see that on British pound dollar, this looks like we are starting to be bearish. So the bearish relative strengthiness on 30-minute chart is broken. Everything looks like that. Now we expect the market to go in a different side, but usually this is the trap for retail traders, because I think that the big dogs, that they're trying to push the whole market down, and they want to find some good level to buy and to continue this bullish pattern that we have from the Asia session. So if you see the Asia session right now, it's really insane. So for the beginning of the Asia session, we just started bullish. Every single candle is bullish, and we went, more than 150 pips if I can see on the chart. So it's really insane, and we have such a good push. To be and short the trade can be a big mistake. And I was in that mistake so many times. So just because of that, to avoid that previous experience, I'm now on the different side. So I believe that price will go up. And the good thing is, for the swing traders, based on my analysis of the important price levels, I analyzed them in the last 50 years. And in my opinion, the next level that we can see, which is the institutional level that can hold, is level 1.363. I think, yes, this is the something like this here. This is the first level that is very important based on the price levels from the 1985, I think. So I just wanted to analyze that, and this is the big room. So if we break 1.3440 and we start push up, I'm thinking that I will enter in some swing trade and maybe target 200 pips more from that, because we don't have any strong resistance right now that can hold, that can do something here. Maybe this resistance here at 1.35, but this is usually psychological level, more because psychological level in the past, and usually, as you can see, the price always start to go up after that. I had a few examples before that. So for me, I think that we really have a big amount of the space for the future trades here, and I think that we can see I can see maybe a larger push for all major pairs. Of course, if this situation stays. However, if we watch fundamentals right now, so I think that all eyes are related to the U.S. interest rate. So we know that U.S. government, they want to cut interest rate. We know that Donald Trump wants from the bottom of his heart to cut rates as soon as possible. So whole market expect interest rate cut, and if we see that interest rate cut, of course the price can go higher for euro dollar, British pound dollar, and that pairs. So in my opinion, this is the crucial. And this is why I look this right now. While I am talking, you can see a 10 pips push. So based on the technical analysis, I think that every single retail trader, if wants to enter in this level, 23.6 Fibonacci level, it will try to sell. But price is starting to go up, and I'm sure that we will have several attempts to 1.341 or maybe 342, and we will oscillate all the time, and in one moment it will be some kind of the break. However, I just want to tell all traders to know that can be a good trick here. What can happen is we can oscillate in this range very long time, maybe 1 day, 2 days, 3 days, I don't know. And in one moment you can see how price breaks support and touch maybe 1.336, 33.5, and you think, yes, this is it, we're going bearish. Make a sell trade in that moment, and price just like insane moment start to go against you, start to gain bullish in the market structure, the bullish market structure on the daily chart that we have right now, and start to go up above the all highs that we can see. So this is why I'm 100% sure that we need to be very ready for that scenarios. And this is why if anyone wants to play here, just buy on support, sell on resistance, but always remember that buying orders are our primary goal, should be primary goal here, because we are really in the bullish market. So we're really in the bullish market, and look, this is the insane. And just to tell, as you know, from the last week, I have a one buy trade for Aussie dollar, and I'm still hold that buy order. As you can see, we already have more than I can say almost 100 pips up. And the good thing is what I'm trying to achieve is this crazy level here on the 0.7. So I know it's almost 600 pips from now, but like I said, this V shape and this push on the market, and all these fundamentals and the good risk reward ratio is something that that give me hope that the price can go here. Of course, if I see a bigger push above this resistance, maybe I think 100 pips or 50 pips, I will move my stop loss on the break even, just protect my trade. But for now, I'm waiting to see what will happen. My stop loss is last 4 days low, and I'm just waiting to see what will be for the market. And the next thing is New Zealand dollar. As you can see, the same picture as Aussie dollar. This the same resistance I see here, very, very far away, but the Aussie dollar is a better risk reward ratio trade for me. And the US dollar, Japanese yen, we are still in the channel. It's very boring. I will never buy US dollar, Japanese yen, just because the US dollar is so weak, and for me it's not smart. US dollar, Swiss francs, as you know, I'm planned to build a buy trade here, but of course we are far away from the buying right now. I analyze the market structure and the futures market, and I figure out that based on the COT report, we are really on the very good ultimate high-low moment, and a very good moment maybe for the buy trade, but only for a standpoint of risk reward ratio. So there's no trigger for buy moment yet, but I can see, I will just show that on relative strength index. I will just put like this. So I just see right now how price is still bearish, and there is a bearish move here. And what I want to see is a strong bullish daily candle, which will make some breakout here. And when I see the breakout, I will enter in this trade, and I will hold that trade maybe several weeks. I don't know, but this is my plan for US dollar Swiss. And this is the market structure for US dollar Swiss. We are still market structure on the bearish side, and of course we are not ready to buy right now, but I'm just watching this market. I'm watching a Dow index too, for the trade that like to trade indices. For this trade, we are bearish. In one moment, I expect something to happen to go bullish. But the good thing is that I like here, and this is the relative strength index indicator. So if we break this relative strength index indicator and we have a daily close above this trend line, for me, it's a good swing position. Why I'm talking that? Because right now we are trying to go 55% from the ultimate high of the Dow index to downside, and 25% for Dow index is record a very, very, very strong correction. And when we see that strong correction, I know that the hedge funds and the big players buying indices and stocks and everything, because statistics, we have maybe in one quarter of the center, one quarter, we will have maybe 5 attempts to see the more than 25% down on any index. So it's really good thing. So this is my setups that I'm watching, and of course I'm watching US dollar CAD, but I don't have any kind of setup here because all these fundamentals and this ultimate US dollar low, and of course I'm outside of this pair, but I monitor that. So as I said, just to see my trade of the British pound dollar right now, what's happened here. Oh no, I hate when I need to play with charts like this. I think that some platforms need to put a button for this. So I just press the button. In that moment, I see the latest price. Not to play like this, but okay. So where we are, yes, we are oscillate here. There's no momentum downside, but there's no momentum upside. But we will see. We will see what will happen here. This is my really Bermuda triangle for British pound dollar, and For range traders, maybe this is interesting, but for me, I'm out. I'm out of this. But okay, we will see. I hope that we will see. Eurodollar has a push right now, so we will see. I hope that I'm on the right side, and I expect to see more bullish trend. And guys, what do you think about Eurodollar, British pound dollar? Do you see the future bullish price to extend to some ultimate highs? How do you see the market right now?
I think, like, I mean, it'd be interesting to see what Aymane you think. So you mentioned interest rates, and just before we came on, I was just touching base on a news article about President Trump of the United States laying into Jerome Powell of the Fed, which we've known has been the context. President Trump has said that he wants interest rates to come down. Now, here there's in the context of this chart, right? There's two issues here. So you might think, some people might be of the school of thought that if President Trump successfully manages to leverage the Fed a little bit to bring down interest rates, that most likely would be premature. Now, we don't want to get into a comment. We're going to do a podcast on this. I think probably it'll be out next week. We don't want to get into the weeds of, is the Fed's policy make sense on inflation, which it arguably economists say it doesn't. So let's just presume though that there's that whole context, right? Is that good for markets? But I think that the thing which we haven't mentioned yet is that I think the next big crisis is arguably going to be around the whether or not the Fed can maintain integrity throughout, or an independence throughout this challenging time. And it would arguably be catastrophic for the US dollar if, say, for example, Jerome Powell was fired, right? There would be, it would be the worst thing we may have ever seen happen to the US economy. And I think this is more the context. And we're going to jump into this, as I said, with the podcast, but I think it's, that's probably the narrative which we need to pay attention to, as that's obviously going to have. We don't want any of that. We don't want, we need the independence of government agencies, whatever country we're talking about, right? And when that slips potentially, or the perception of it is slipping, that is when, we are really terrible kind of territory. So it'd be interesting to see what happens going forward. But I can't disagree with your sentiment, Igor, based on that. I mean, Aymane, what are you thinking?
Yeah, you said this very well. Now it's about, like, because I saw a couple of comments also today and last night about firing the White House. They put some comments about the President Trump is thinking about, let's say, if it's possible, because normally it's not possible he to fire the power. So if it happened, it's a matter, let's say, of integrity. I think it's I'm not sure how the dollar will react to it, but for sure it will be really a big hit for the dollar. I have a question, for Igor or Paul also, like currently, you think what you think has more impact on the dollar? Is it the tariff more, or is it more like the inflation and the other macroeconomic things?
I think that always is interest rates, because that I think that moves the currency market right now. For me, interest rate is always and it will be the biggest and most important thing in fundamentals. Then it will be inflation and everything else. But I think that all these fundamentals are something that we use to see what will be the interest rate, because the interest rate in the past and mathematically will, if some country has a big interest rate, other country has a low interest rate, we will see the difference in the currencies very soon. It will be, you know, if you just look the Japanese yen and US dollar for last, you know, couple of years, you will see crazy movements in that currency. And I think interest rate is very important. But here, what we have, interest rate increase will never happen, of course. So we can reduce interest rate, and we will do that. So the question is how much? It will be little bit by little bit, like Powell wants, or it will be a huge interest rate cut because Trump need that, because he's tariff war, because he don't want inflation, etc., etc. So I think that right now we know that we have only one thing. We just don't know or which percentage will be interest rate cut, and this is the something that you know, it's good for traders, because we know that whatever happens, it will be a little bit weaker US dollar. We don't know in which percentage, etc., but that will impact like that. And Donald Trump, he's fighting for the stock market because he's afraid that stock market can drop a lot, and he wants right now interest rate to be to cut the interest rate and to help stock market recover as fast as it's possible. And because if stock market just crash, I think he will never be a president anymore. Because if something stronger than Donald Trump right now, I think it's a stock market and investors and everyone. Because I see the face of Elon Musk just beside Donald Trump when they talk about stock market crash, and I see that Elon Musk wasn't in the mood, like no problem, it's just fluctuation, something like that. So I see the worry faces on all that investors there, and I think that everyone wants to see recover of the stock market. So this is of course my opinion, because I think that US dollar is not important for them as much as that stock market, and I think that they're ready to fight for that. So I see that this tariff war is okay in my mind if everything is organized in US. For example, the Powell and the all smart people in US, and the Nobel Prize economists, and the Donald Trump, and all people, they create some strategy to maybe change the tariffs and to help the US. For example, that will be for me okay. But this war like this, when all these moves Donald Trump makes on his own, for me it's not good. And this is something that he has a lot of enemies in the US, between these investors, between the not just Democratic Party. He has, as you can see, Powell and other people around him, and a lot of. I just watch few podcasts when Stiglitz, when a lot of Nobel Prize winners for economy, and all of them, each of them, they create a very bad opinion about these Trump moves. And when I see that it's very smart people, that the professionals, that they just know that, and just they want to just explain Donald Trump that this is the how they call that economy 1-to-1. He needs to understand that his way of thinking is very good for 90-50, for example. When we had factories, in that factories work thousands of people. Today, all that factories that exist, especially in China, it's a 90% of that factory is actually robotics and machines, and few people there. And he thinks that all that people, all that everything will transport from China to US. But I think that industrial production of the China will never stop, and the way how he's thinking is not good, and I think it's wrong a little bit. And we will see. Of course, I'm nobody. I'm just a guy with his own opinion, of
You-
course. But I watch that economists and I watch that very smart people, and I believe when, for example, when Stiglitz, who had a Nobel Prize winner in that field, and he started to talk about that, I believe more Stiglitz than Donald Trump. So
Yeah, no,
so
I mean, look,
it is the
it's,
way. Yes.
look, I mean, it's, I think, obviously, you know, I read, you know, you know, what you're saying is, a lot of people, a lot of economists agree with you. There's obviously a lot of economists on the other side of things, which are kind of behind this approach as well, which is, I mean, you know, which is quite interesting, and how that outlook works. But I think the question, in terms of going back to the original question, I suppose it's I mean, look, I mean, I saw something from the White House the other day coming about clean coal, and I haven't heard that term for like 20 years. And I think, going to your point about the, you know, the way, like, there's a perception of what America is now and what it used to be. But I think that the biggest question with regard to the dollar is, and you're going to get obviously a lot of disputes about economists about what we're talking about, but it's like, what does lack of confidence, fundamental lack of confidence in the dollar look like, right? I mean, that's the question, isn't it? What does because, you know, you've got interest rates, you've got the trade war, but what all does that mean? It means a growing and consistent lack of confidence in the dollar, right? And
Yes.
and I don't know what that looks like, right? You could say it means up, down, and usually it could be quite paradoxical. I don't know, and I think until we can answer that question, it's going to be very seat of our pants kind of assessment of some of these Forex pairs, because, you know, we don't know what that looks like. And we do have historical precedent to see what that looks like, but it was from a long time ago, and the whole world is completely different now. It's the information age, right? So we can't use that as a, you know, we can look back to the Gilded Age, we can look back to the turn of the 20th century. I mean, I looked at gold from the 70s a couple of weeks ago, but how helpful is that? Because the context is so different in the modern world compared to then. But saying that, you look at the pandemic, and it was almost like a mirror image of the, you know, the pandemic of the Spanish flu back in the start of the 20th century. We all regressed. So, you know,
Right.
it's we're definitely going to be digging into this topic at Ola Prime a little bit, for sure. But yeah, interesting times.
Yes.
Really interesting.
Yes. But I think we need to find the way as a traders to use to be on the right side, because we talk about bias. It's good when you have a right bias, when you know when market is going right now, and to be ready when that market switch to another side. So right now we have a cycle from the January 24, something like that, and there is a 3 months of the bullish euro dollar, bullish British pound dollar. That cycle is right now. So as we know that the average cycle is around 3 months, maybe we can something can turn around, and again we can see the stronger US dollar. Of course, this can happen more 1 month duration extension. Something can happen, of course, but this is really tough times, and for traders, and for economists, and for companies, because I know that a lot of companies suffer right now. So
Yeah, it's
So-
yeah, for sure. Do you mind if we
like,
sorry, Aymane, please
of
go.
course,
no, just like I put myself like in place of, let's say, the smart people with Donald Trump. So for them, like, what they think, like, what is the in the future, of course, because Trump is using this phrase a lot. We will suffer a little bit short term, but long term, it will be really beneficial for the country. So what you think, Coach Paul and Igor, like he's talking about, what can bring to the US like this policies in the future, let's say in the long term, if we want to talk a little bit from the positive side?
Yes, but of course, I understand. They want to start to put production in the US. I understand they want a lot of US companies to start production in the US instead of China. But the problem here is that people, first, I think it's not a problem. I think there is a lot of things can beneficial for US. Of course, factories will start to work there. I understand that they will in some way they will maybe make stronger some US companies. I understand all of that, but the problem here is that US is not a production country as Donald Trump thinks it is. So when we take statistics, for example, we can see the services are maybe the most powerful thing that US has. So look, Microsoft. Everyone use operating system right now on our computers. It's US, it's America, but it's not production as we can see in the factory. It's IT industry. They have Dow Index. I think the all stocks are there from the IT industry sector, which is very strong in the US. And I understand that they want to make production, but that production, even they do that, will never bring the fortune for them that they think that will have. I will just give an example which changed my perception. I think last 7 days I'm thinking about that. So there is the manager who is talking on the YouTube. He was in China and he took the iPhone. The iPhone, for example, like this that I have, for example, and the iPhone costs around $1,000, maybe more in some countries. Production of iPhone is $10. And he said that, and I just repeat that 5 times because I couldn't understand that iPhone that I'm using is $10. Actually, that production in the factory is $10, but that's software, and the whole picture it's $19. And I think this story is actually what America is. That patents, intellectual property, services, IT industry, smart people, all these beautiful things that US has. I think that this is America, and this $10 hardware is nothing, and Trump is fighting for this $10. This thing I just wanted to say. I think already that America is so strong country, and I know that every single person. I think if I need to choose, will I work in US or in China? I will pick US because it's a really rich country. And it was rich country, and it will be the rich country because they're the best investors, the best traders, the best everything is there. So the positive picture, America is already strong, and I believe it will be stronger in the future, of course. But I think that it's no problem if China is the bigger production center, and if America need to. I think that they're rivals right now, but I think that it's not good to be such a big fight. I think that this world can accept in China and America, and they can work together. And I'm a little bit too optimistic, and maybe I'm not the guy for that because I live in in some clouds, and I believe in the happiness. I'm just like John Lennon, you know this. So I'm in that way, yes.
The thing is, it's like, so like if you want to use the, I mean, you know, you want to look at the Apple situation, right, as an example. Now, I think there's many ways to look at it, and we want to use the $10 iPhone as an example. So in that part of the world, the supply chain for rare earth minerals and all of the things involved in the creation of these devices has been established for decades. It is intertwined with the whole of Asia, right? This is something which cannot be unpicked, right, very easily, and it cannot be picked up and transferred to the other part of the world, right? Certainly not overnight. You know, we're talking a decade, right? We're talking 20 years in order to, I mean, Apple's been trying to reposition its production lines, you know, to India and other parts of the world. And it is a snail's pace to do that. It takes a tremendous amount of time. And all of the elements needed to recreate that, even just practically ignoring cost, doesn't exist. And it won't exist tomorrow. It won't exist next year. And it probably won't exist within 3 or 4 years. It needs more time. And that's not anything to do with how that will then impact the price by having to create a new supply chain with new materials, which ultimately are coming from Asia, because that's where the most resources are. So it's very complicated. And this is what we were talking about. Like, what does a lack of confidence look like for the US dollar, right? And all of these things are a lack of confidence because, okay, this is principally an okay idea to bring more manufacturing. You know, obviously during the pandemic, a lot of countries, including my own, realized that we don't have enough a supply chain for face masks ourselves. We rely on other countries. So that makes sense. That's fine. But it is a multi-administration approach, right? It is a multi-year, decade plan in order to do that. Not, sorry, Apple, you can't bring anything in from China today because that, of course, will increase the price. So I think, you know, you've made some very good points, but it's more complicated than any of us can possibly get our heads around. We would need to have a team of economists, supply chain analysts, and get them all in a room, right? And then we might have an answer, right? But
and maybe they will not agree. They will not agree all of it.
Right, they won't agree.
Yeah.
So again, where does that leave us? Do you mind if we just have a look at what crypto's doing, and then Aymane, we can maybe pass back to you for the last word. Does that work for you?
Yeah, perfect.
Okay, let's have a look.
I saw some good movement of Bitcoin.
Yeah, so yeah, absolutely. We'll jump into that. So this is GMX. This was a trade which I've been waiting patiently to fill. Currently, the premise of my trade for GMX was to wait for a pullback following this strong run up, and then just try and enter at around this area. And my order is still, of course, waiting patiently. Now, the order may be removed if the context changes, but right now, Bitcoin is giving us some bullish moves. So if we can get the price action back down to this level just with a wick, I would be happy. So this is the only context where this trade will work out for me. So yeah, we're just waiting for that to play in. I'm being very cautious, letting the price actions come to me. And when it arrives at this area, something I'm seeing isn't great with the rest of the market, then I'll just kill the order and then maybe put it a bit lower. But that's still in play. That's from last week. But what is Bitcoin doing? In fact, no, I got another one. Let's have a look at Move firstly, because Move looks like it's about to pop. So this is a MKR. So not Move. This is Make. Excuse me. MKR. Forgive me, not Move. This is MKR. Previous stop altcoin pick, and it was originally, you know, buy the breakout if it goes in this direction, buy the breakdown if it goes in this direction, where we did have a bearish slant. One, because we've got this moving average over the top, of course, which means we have principally more resistance, but also this is we are in a downtrend on the intermediate, and this is the most logical area for the price action to stop. So it's still a short bias, but looking at this, any of these tokens which go right to the end of the pattern, we could see quite a strong move. So get your planning in for both directions in place, because you know that could happen over the next few hours. But why do we expect something long? So this is Bitcoin parabola, and we were worried that we were going to lose it a few weeks ago at the start of the month, but now we have finally made it out of our base 3 kind of bull flag, and we are potentially looking to make a move higher here, just for perspective. But let's just zoom in to some straightforward charts with Bitcoin. So this is Bitcoin 6 hour, and we've obviously had this breakout of this pattern, and we were stuck here, but finally we've made a move upwards, and we're still, of course, looking for that higher low. So a continued move upwards here would surpass this previous high, which would then give us the first signal of a break of this trend, which would be a higher high. And then we just need the price action to come back down and fill this higher low, which was originally here, but I think we can maybe have it at the other side of this pattern now, which is pretty bullish. And just to look at the 1 hour, this is what it looked like. We had this double bottom. This is where we were at the start of the month. And now we've been making some steady gains. We paused for a little bit, had this bear trap, but the buyers at the point of control managed to propel it back up to the other side. And now we are trying to tussle with the 1-day 200 MA. And this is what I wanted to just briefly talk about. If I can find the chart, which I'm guessing I can't, which is very helpful. Let's have a look. Bear with me, people. No, I can't find it. That's great. I think I've closed it down, so forget about that. Sorry, but here it is. I've got it. No, here it is. It's fine. I'm so silly. So we've been looking at Bitcoin's tussle with the 1-day 200 MA, and we've been trying to find some historical precedent for how the price action previously has interacted with the 200 MA. And you can see with these examples from 23 and 24, and this is of course where we are now, that there are some very interesting similarities with how the price action interacts with this moving average. So right now we've had this dip, right? We've had this dip, and now we are attempting to retake or have a go at the 1-day 200 MA. And previously when we've done that, we've had a bit of a regression for the next couple of weeks. And then the second attempt was successful. And if the price action repeats historical precedent, then we could see a retrace to put in that higher low, as we were just talking about, and then a break above it for continued upwards movement at maybe the end of April, which tracks with other longer term signals we're looking for in terms of candle body closes and so forth on the monthly chart. And you can see Bitcoin right now, it is pushed above the 1-day 200 MA, but obviously is running into significant resistance. And looking at the RSI on multiple time frames, on the hourly, you can see we've got a bit of room to come down now. So you'd expect that the same with the 4-hour. We're back in oversold territory, maybe a bit of a double top. But the 12-hour, still a little bit of space, just to keep an eye on that. But I would expect a reversal out of Bitcoin soon to maybe come back down to put this in. But what else we got? So this is economic policy uncertainty strategy indicator on the bottom. And we have a straightforward blank chart of Bitcoin monthly on the top. And as you can see, the last time we had this particular uncertainty index, and this represents essentially a correlation, a pooling of newspaper articles, online feeds, and all kinds of stuff which represent uncertainty in the US economy. So it has a clear, tangible data points which it's pulling from. And the last time we had this economic policy uncertainty strategy index this high or approaching this high was the pandemic crash back in March, April 2020. And we are here again. So does a pullback lead to Bitcoin's leash being taken off? Potentially. But we also have some room, some more uncertainty, some more dollops of uncertainty, which we could, of course, see as well. So this is just bear in mind that even though Bitcoin is starting to give us some signals, and you can see here, of course, that divergence with open interest we were looking at a couple of weeks ago seems to be playing out as Bitcoin seems to be following this. Despite this, we do, and here again was the previous bearish curve and handle pattern on the 12-hour. We're in the process of invalidating that, arguably, at the moment. So, more buyers are looking to enter. But as I said, we have to bear in mind that even though we're getting bullish signals, what we were just talking about the current state of the world economy and the fear and uncertainty, is this going to allow Bitcoin to make the move that we want it to make over the next few months? And of course, is it going to help the altcoins? And if we look at this chart here, it really puts a dampener on what we're feeling about Bitcoin today, because look, it's really struggling to hang on, right? This is total 3 versus Bitcoin. And when this is going up, that's good for altcoins. When it's going down or bleeding slowly, like it seems to be doing at the moment, that is not good for the rest of the crypto market, which of course is very susceptible to everything which is going on at the moment. So even Bitcoin is looking okay. It's looking a lot better, right? And obviously we want this to continue up here. The rest of the market is still suffering. And then if we just drop in with Ethereum, right, it's just sitting, right? And if Bitcoin does manage to break above the 1-day, we might see a bit of recovery here, but it has got a long way to go to where where we were in December. And even though Bitcoin has come down a bit itself, it certainly hasn't had this level of retrace, which shows the current disparity between the altcoin market and Bitcoin at present. But you've got a few setups to keep an eye on. Obviously, if you're looking for any long trades, you want to see the ones which are demonstrating the most bullish context. This had a very strong breakout, GMX, and it's been holding its own. So that gives me the confidence to come in a little bit more light on this support area, as opposed to maybe waiting for it to come all the way back down here. And likewise, you know, be very cautious with which direction you trade MKR, as again, why is it stuck in this area? It's stuck, of course, because it's in a pattern, but it's waiting to see what Bitcoin does next. So whatever trade you're entering, whatever setup you're looking for, bearing in mind, of course, I'm still waiting for my GMX entry. Make sure you are keeping one eye on what Bitcoin is doing, because whatever, if you're shorting GMX, for example, or excuse me, sorry, if you're shorting MKR, right, and Bitcoin continues on its way, well, I'm telling you, your stop loss is going to get hit. But then if you enter a long trade here, Bitcoin very likely will come down a little bit, at least, because there's a lot of sellers and they should start taking control. So might be a wait and see for the next couple of days, if you guys agree.
Yes. Yes.
Yeah, definitely. Please, Igor, sorry.
No, I just wanted to say it's really, I think the last hour, I just checked on the Bitcoin futures. I saw that last hour was really big relative volume bullish candle here. And I think it's almost 4 relative volume. So it's a big volume right now. And I see the last couple days push for the Bitcoin. And I can say right now, we talked, I think last week, on a daily chart, relative strength index, we broke that line, and I can say that we are on the good path to go up. Only thing that you are right, maybe we can see small pullback there. I don't know, but I think that we are right now starting a bullish channel for the Bitcoin, and it's starting to be interesting for all coins.
Yeah, I mean, it'd be interesting. So look, this is what the market's been like. Bitcoin's doing its thing, makes sense. It's doing what it did every 4 years. Nothing's changed. Okay, the altcoin market isn't doing that. It's been going up and then resetting. Right. This is what we've found. So it'll be interesting to see what happens for Bitcoin's next leg. But based on what we've been looking at, and based on how the money flow is moving, you know, Bitcoin may make the next leg up, right? But until this uncertainty, which we were talking about that on that indicator as an example, until that uncertainty decreases, I am not convinced that we're going to have altcoin season until these issues are resolved, or we have a clearer direction, which wouldn't be good. But however, the interesting thing about that is, I always talk about how Bitcoin works to a clock, right? So it has to have this 4-year cycle. It's a machinist thing tied into the halving, right? So Bitcoin does have to go up within a certain amount of time, arguably, in order to keep that flow going. But the rest of the cryptocurrency market isn't beholden to that. So Bitcoin could theoretically, you know, make another move for the remainder of the year, rise up to maybe to 200K, maybe, right? If we're lucky, right? Go up in that area. And then once the bear market begins for the altcoins, for Bitcoin, once the bear market begins for Bitcoin, then when we've got a bit of distance from all of these issues in the economy, then maybe that triggers the money flow cascade, which I've always been talking about. And then we see Bitcoin perhaps diverging completely from the rest of the crypto market, but this time in the opposite way. And maybe they no longer operate in tandem as they have been. We've got a question, actually. Is it?
Yes.
Lola.
Yes.
Oh yeah. Hi, Robert. Great to see you. Paul, can you give me a bit? Oh, it's Dot again. Where are we right now? I'm looking to enter at 3.595. Do you mind if I Aymane, do you mind if I have a look at Dot quickly? Is that okay?
Yeah. I really enjoy the way you see things, Paul. Like the comparison between, like using the historical data. I really like to watch your analysis, your comparison. Thank you really much for that.
There's a bit of sarcasm in there somewhere.
No.
No. Yes.
But I'll take it. Thank you.
Yes, we are like
yeah.
So yeah, this is dot. Let's have a look. Okay, so look, anyone looking to trade anything in the crypto market, get your perspective. So where's the floor, right? I feel like we're going to be looking at dot every couple of weeks, which is quite good. So where are we? This is the floor. Okay, we don't need to look up here just yet. Yeah, so we've lost this area. We haven't been below it for 5 years. So we're currently putting in a bearish retest of this zone. So not looking good for dot. You have to ask yourself, if you want to enter a long trade here, where are the buyers? Are they going to show up? Nah, not at all. We had this breakout, arguably, of this pattern, although the pattern's not quite right, I don't think. You know, we haven't been able to hold this long-term support. This sort of support should give you a really strong bounce. Haven't seen it. Buyers aren't showing up. So this is, you know, I mean, I might short this right now. This is a definite short trade. Let's just zoom in a little bit for the 4 hour. Yeah, I mean, look, it's trying to come back up to this area, which is a little bit of a micro range, but this is a bearish retest of a range, arguably now entering in local price discovery. So you want to draw a line in the sand for this if you're looking to trade it, and maybe what you want to see, you know, because you know this is the problem when Bitcoin is maybe putting some bullish moves in. You've got to be cautious, but you're looking for a long trade here. I would want to see a strong move upwards, right, at least above this range, and then maybe that would maybe give me an argument to come in, but you might want to see a proper W pattern or something after a strong recovery. You don't really want to see something like this and try and enter. It's just going to roll over. You need something at least up here, ideally up here, and then you can maybe come in and buy support when you can. But it's a short trade from this point, but I would maybe for a short trade wait for a break of this pattern and just because it is an ascending triangle, and then maybe enter like that. But it's really a short trade. It's got a lot of work to do to enable any longs at this point. So it's definitely a short, but keep your eye on Bitcoin, maybe get the other side of this pattern for bearish confirmation, and then you might want to see Bitcoin coming down a bit before entering. But yeah, not looking good for dot, I'm afraid. Sorry, dot fans. So yeah.
Yeah, just to go back a little bit to your analysis about, is it GMX, I think?
Yeah,
like you mentioned. Yeah, please. You mentioned something like if the context will change. So I like the question is, what are like those things, those contexts that will let your, let's say, your setup invalidate?
Okay, so this is the perfect sort of scenario I wanted to see for GMX, right? I wanted to see, you know, I wanted to see Bitcoin start putting in some bullish moves, right? So we've had quite a few now. We've had a few breakouts, a few bullish signals, which means there's more buyers looking to come in at higher price points. Really straightforward. So for me, this, of course, for GMX, this is a long-term support zone, right? It's quite a significant zone, and that makes it a little bit difficult to judge where we're coming in, right? So we've had a strong breakout. That's fine. We surpassed this previous range. So in order for me to come in at this level, which is currently what I've got my trade, my limit order on, in order for me to come on this level, right, I need Bitcoin to maintain a bullish posture. It is doing that right now, and there are many scenarios where it can maintain that over the next few days, right? That would be coming back down here to retest that. That's a bullish retest, and that supports some negative price action. And we can bounce from there, coming back down to this area. Again, still bullish, right? Flipping this area from resistance to support. So there's a lot of narratives, which means that if this comes down, this would be a nice place maybe for then Bitcoin, falling in a bit of downwards move for Bitcoin to come in. However, if Bitcoin then, I keep losing the charts. Oh my God. If Bitcoin, let's find the right chart. Oh my God, sorry guys. So if Bitcoin, however, comes back down into this pattern, you know, loses it perhaps, or loses this area and comes back down into this zone, right? As an example, then I would be like, you know what, I'm moving this and I'm going to come in at a lower level, right? Maybe at this area, right? And that will be the premise of my trade. I'm not scaling in at the moment, but that's what I would do. And then if Bitcoin goes to the moon right now, and breaks right above this moving average, then sadly that's too bullish, and this trade might be invalidated because it probably ascend from where it is, right? But that's the negotiation, if that answers your question.
Yes.
Yeah, thank you very much. So just to add on what you said about Bitcoin, like that was a really nice, I think we talked about it last week or 2 weeks ago, double bottom, like on the area of, I think, between the 80 and 70. And I think you also, Coach Paul, we agreed about if we will break this support, I think the Bitcoin will go lower. But for me, of course, if you bought Bitcoin, it's like on the 80 or the 76, 74 or 80. Now, like there is, for me, like I think there is a lot of, from what I see, there is a lot of barrier. I mean, with that, a lot of resistance. There is first resistance just above the like 88K. There is another resistance at the 93. So what do you think, Coach Paul, about the potential resistance in?
Yeah, I mean, I've just shared my screen again. I think, can you see this daily chart? Okay.
Yes.
I think this probably highlights you're quite right. Okay, so we came down here. We are now, this is a macro uptrend, potentially now in the process of shifting the intermediate trend from a downtrend to an uptrend. Okay, that's the context. However, you're right. Look, we got this fib level, 100% fib level right above. This is obviously represented also with clear resistance line from this area, right? So, and you also got the 1 day 200 MA, right? Which is that's a lot to get through, right? That's a lot to get through, right? So you're absolutely right. And, until we break up above here, we're not going to have, the bullish content. So this could come back down. We could have a higher low in the price section, right? So this gets rejected. It comes back down. We have a higher low, which is kind of this curve, this intermediate trend curving round for sure. But then we've still got this resistance level to deal with. We've still got the 200 MA to deal with, right? So that just strengthens the case. But I would think, like, what does Bitcoin need to do to break above this, right? I mean, sure, it could have a push now, but I think you're more likely it's just going to be a wick and then it's going to come down. So what do we need to see? We need to see, firstly, of course, Bitcoin to do that, right? And then come up and then put a strong foundation in, but it hasn't done that. So we need more buyers. We need more buyers on our team in order to win the battle against the sellers. And I don't think we've got them now. So this comes back down here, right? We scoop up this higher low, right? Which is what we've been waiting for the intermediate trend. Low, lower low, higher low, right? And that's great. And if we can get a wick maybe over the next few hours, which gives us a higher high above this range, even better. Then when the price action is here, approaching the end of the month, which is kind of what we've been talking about, then we've got confirmed intermediate downtrend switching to an uptrend, more buyers show up, and then we can then attack the sellers, which will then start to disappear a little bit, knowing that higher low has been put in. But until that higher low has been put in, the sellers are probably still in control. So we do probably have a couple more weeks of price action out of Bitcoin before we can have any hope. But saying that, we can end the live stream and Bitcoin might go straight up to 100K. It likes to do that. So who knows?
Yes. Yeah, exactly. Like we could like finish the live stream and Bitcoin create all-time high. So yeah, definitely now there is like bullish momentum, but as we said, like there is a lot of resistance there, like on the 88, on the 94. And as you mentioned, Coach Paul, that we need to see more structure, more confirmation on our side. So yeah, I have. Let's show just quickly, if it's possible, just Bitcoin charts. Also, we can.
Yeah, let's do it.
Like just gold also, because gold is skyrocketing. Yeah,
interesting correlation with Bitcoin, maybe.
Yes.
Yeah. So Bitcoin, my levels here, like I have this level here to buy from, and that will align also with one of the scenarios that Coach Paul said, break above and then come back, create, let's say, higher low, lower high or higher low. I don't know what's the term.
I always get confused.
Yeah, yeah, higher low. So it will be really interesting, like to take buys here, and again, if we will not hold this support here, I think we will go lower. But as it stands right now, there is definitely buyers are pushing the price. We have this supply here, this resistance here, and we have also this resistance right here. So there is a lot of there is a lot of, let's say, price action that we need to see, like the price how it will form is if we will break this structure here. For me, I don't know for crypto because I'm not an expert in crypto, but for me, like the structure, to confirm the structure, that's me. So let's say we are going low like this, and for me, like if we break the structure like this, still I call it not confirmed structure, so we could come back like this. So we need to see more price action. For me, because I was trading with the structure before, I use at least like we have to break the structure and then like need another high after we broke the structure. Exactly. So we need definitely like some good price action in our side to take buys. In my opinion, it's in my opinion it will be like bad decision to buy from here or from here, because there is a lot of resistance up here. So of course it's possible you could take risk and buy, and yeah, you could be right, but what I am seeing is a lot of resistance. We are pushing with big candles, so just to invite buyers to take them out if they put their stop here lower. So it will be interesting if the price will come back to this area here for more buys, or the sellers take control more, because for me sellers are still like in control in this. If you are watching the price action here and especially in the daily, like we're creating lower low, lower high, lower lows. So if we broke one time, doesn't mean we turn bullish. As I said, there is a lot of resistance. So we
yeah, I mean, it's interesting how like so the next obvious thing is obviously that higher low, and it's interesting how, say for example, Bitcoin does, as you suggested, it wicks up a little bit, right? It does break this, it does break the range we're in at the moment, and puts in, it ekes out a little higher high, right? Just ekes it out, right? So there's a little bit of a higher high, right? That may then result in the higher low being more assured, or maybe not as deep a retrace because of that higher high. And this is what we traders need to realize, that it's always a negotiation between observing the battle between buyers and sellers. And if you see the price action put in a higher high, that is a winning move, right, in the middle of that battle, which can change the tide of how it goes. And then if on the back of that, right, the sellers start to get demoralized, that guarantees almost that higher low has a significantly improved chance of happening, right? And that's how the tide of a battle turns, right? And there's always, we talked about earlier about front running patterns and all this kind of stuff, but this is what we do with Bitcoin. But then we go away and we wait for the signals from Bitcoin, and then we trade the altcoins, right? And this is, you look at the altcoins and you want to get confirmation about how bullish Bitcoin is. Look at the altcoin market, right? Because if Bitcoin's bullish, they will be, at least in the short term, moving. And when they're not moving, they're telling you that Bitcoin needs to give them more signals. And that means, of course, you need to wait for more signals before entering along, as an example. So sorry, I hijacked that. Sorry, Aymane.
No, exactly. Like that's perfect. Like it's perfect what you said. And just to give like just a quick, let's say, couple of scenarios in terms of structure, we could break, because we are in a supply. So we will expect like to have a retracement, and then we have another supply here. We could have a retracement. Of course, there will be a lot of price action here created. So we will have a lot of things to base our idea of to take buys. So this is, let's say, the first scenario, and even like this first scenario, we could, as I mentioned, create higher high, another higher high, and come here and create a failure, let's say. So there is a lot of things that could be like a lot of context to it, but you have to be at the moment to see what is happening, because if you are basing just on the structure to base your trade, I think you have to work more on your strategy. So of course, like as I said, there is a lot of scenario to it. So like higher highs and continue, or higher highs and then create failure, which is everything is possible. We are talking about scenarios. Come back to this demand zone, and the other scenario is simply like another double top like we had here. Let's say a good push to the upside, and then a double top, and then come back to this area and test it much deeper. So for me, like, but as it stands right now, yes, momentum for bulls are here. We have to wait for at least a couple of days, 3, 4, 5 days, to see just how the price will react to this area right here. So yeah, in term of gold, like look at gold. So we had a V shape, like Igor mentioned. I think it was EURUSD or GBPUSD, Igor.
Yes,
like
I think
the V shape.
Yes, V shape. We had several times. I think we had an Aussie dollar in Kiwi dollar, and all these. I don't know where I saw that again. So on several assets we have like a V shape right now.
Yeah, there is a trade you took live right now. It was a V shape also. Is it GBPUSD, I think, or?
No, this British pound dollar. I took that trade, but it's not like V shape. It's more just experience. It's just experience thing. But Aussie dollar was like a V shape, and I took that trade because of that and the really strong momentum that we have. 6 bullish daily candles. It's really big push for Aussie dollar, and this is why entering that trade.
Yeah. So definitely here in gold we had a V shape create all-time high. I suggest, and it's my opinion again, to not sell the gold, stay away from gold, or trade continuation, or wait for the price action to form if you are an intraday or scalper, to trade the retracements. Otherwise, how it stands right now, continuation. I have this area right here to take continuation. I have another area at the 3,333. I have another area here at 3,291. Of course, we'll have to wait for your confirmation. So gold definitely like shocked me a little bit, especially when we are selling off right here. If we come back to see what we respected. So we didn't even touch this demand right here. So we touched this 4-hour demand, and then you can see big push to the downside. This candle here took this previous week, closed bullish, and we had continuation. I think here we talked about this move. It was more about when the equity market, when let's say the S&P 500 NQ was selling off. So we talked about like gold maybe selling off also because like investors are taking profit from the market. So we have this move to the downside. I think it was 6-7%. So yeah, I think that's it for me. Let's check the dollar. Yeah, the dollar is setting off.
It's kind of the inverse, right? It looks
yeah,
mirror of gold, really.
Yes.
Actually, yes. It's a mirror. Yeah. We had this 97 area right here. Maybe we will, let's say, the dollar will rest a little bit here in this area, but we will see. There is a lot of events that will happen. That is happening. There is a lot of things that we should watch. There is the interest rate. There is the power also. There is Mr. Donald Trump. If he will fire the head of the Fed. So it's quite interesting. So yeah, any thoughts about?
As long as the dollar doesn't rest in peace, we'll be okay.
Yes. It's a bit like that. So, guys, just to recap today, so it's a really, really bearish day for US dollar and indices. So I'm glad that I see Bitcoin rebound right now for Paul and for all crypto traders.
Yay, me!
Yes, and it was a really good session today, guys. I wish you a great day, and I hope that we will see you again very soon. So,
Likewise. See you guys. Thanks, Igor. Aymane.
Thank you. Thank you very much. Thank you for this.
see you guys. Bye-bye.
Bye-bye.
Hello, everyone. Michael, Howard.
Hey guys, how you doing?
Hey, what's up, guys?
Good. How are you?
Not too bad. Happy Easter, if you do Easter.
Oh yeah, of course. Happy Easter. Absolutely.
Yes, sir.
How was all your trading days been? I haven't seen you guys in a while. I was off last week, but
yeah. Had a little sabbatical there, it seems like. I guess he was on a celebrity tour or something, right?
Close. But all in good time will be shown on Ola Prime. But very exciting stuff. But yeah, how was trading today? I didn't actually trade at all on my end.
Yeah, same on my end. We had on the currencies, we had a massive open. Usually in Asia, when you get a massive session in Asia, you know, it's like you've missed the move for the day. That's kind of it. So the game, I suppose, would be waiting for the retracement, which is what I'm doing, and I'll go into that a little bit later on. But yeah, certainly no trading for me today.
Yeah. Same thing. I was looking at Bitcoin. We can definitely pull that up. It looks like it's finally about to break that little area. So this is about to get super interesting.
Awesome. Yeah, pull it up. Absolutely.
Yeah. Let me show
also,
you.
Howard, I think your microphone's not working. I think you're just using your computer's microphone.
Okay, one sec. Yeah. Okay, 1 second.
Yeah, sounds a little far maybe. But cool. I'll jump right into showing.
Go for it, Michael.
Okay.
Yeah.
How's that better?
Hey, much better. There we go.
Much better. Yeah. There you go. There's Howard. All right. Cool. So let me jump on over here to my other template. All right, so getting to this Bitcoin, right? So you were gone last week, Sam, but we were talking about this for a minute, saying, all right, guys, if this thing, so I still got my everything kind of marked up here, right? So I said, hey, we got this 5,200 cross down here. So I'm long, right? Or my bias will be long, not necessarily long. But every time we had some interaction off the 200 EMA, it kind of went longer, right? So we had one here, we had another one here, and then the third one happened here, right? So it's been kind of sitting there for quite some time now. I say the first day was probably around February 28th, right? So nearly almost 2 months of just kind of hanging out here. And then I said, hey, if this thing closes on the daily, mind you, in the daily chart, above this 50 EMA, which it could or could not do, maybe, then I'm long, right? Like nice. Right now, I'm still in the middle. Like right there's, I have no real bias for this. If it closes above the 50, at that point, to me, that's an entry signal to go long, right? So it's literally right there. And then so that's my long bias, right? And then my short bias would be, hey, if this thing comes out, and it's 50 EMA and it's 200 EMA cross each other, and we get short at that point. So then I would be looking for some type of M structures to go to the short side, right? Stops to go over here, entries here. TP not really short just yet, but this will be my low bias, my short bias, right? Let's say if the 5,200 cross to the downside, then I'm short here. But anytime before that, I'm kind of just hanging out, just watching it, monitoring it, see what it does. But it looked like it could possibly go ahead and break above that 50 EMA, guys. And again, at that particular point, now I'm no longer sitting in the middle here or long, or short. I will be long at this point. So we'll see how this closes on the daily today, like in the bit. But as you see, this thing is right here at that exact point. If it closes up anywhere above this 50 EMA, which is the blue one, this is long. At that exact point, this will be long for me. So yeah, Bitcoin's at a
I tell you what,
point.
Yeah, it's at a very interesting level because I guess what it's doing on the daily is it's kind of retesting that double top breakout point on the daily chart. Let me just whack it up 1 second.
Yeah, super close. Paul,
In fact, the
and
weekly.
Jannie and I were
Yeah,
all like going back and forth about it.
yeah, I know. It's created a lot of debate. I think this
It
this
has.
particular chart, because it's
It
been very
has.
kind of boring for the last week or so. It's kind of stuck in the range. So yeah, this is actually the weekly. I know a lot of people, Jan in particular, has been kind of monitoring this kind of support level, big support level, and he's kind of bullish and long. Whereas I've been kind of like seeing this as a bear market bounce. For me, the key level is really kind of this pivotal level here, where we've got the kind of reaction high, 88,760 or so on my chart, and the double top level, 88,986. So for me, I think I need to see this really above 89 to actually turn bullish. In the meantime, I'm kind of looking for this thing, and maybe it's starting to reject now. It looks like we're starting to see a bit of a shadow form. I know the weekly is it's a little bit early to call a weekly candle, but it looks like we're kind of rejecting from that big area. So from my perspective, I'm looking for some clear rejection to have a crack at the short side to look for a retest of these lows. It was kind of moving with the stock market. Obviously on the way down, it double top and breakdown, retest and new low kind of thing. But it's decoupled a little bit on the last few days, last week or so. But the stock market has started to head down again. So I'm wondering whether we're going to start to see some aggressive selling in the stock market that's going to drag this thing lower.
Yeah.
So that's really what I'm on alert for on this one. So what do you think, Sam? Are you bearish on the stock market, or you got a view there?
Yeah, I'm still bearish. Same with Bitcoin as well. If I pop up what I see, bear with me. Bitcoin, here we go. All right. My chart's showing yet? Oh, here we go. Whoop. There we go. All right, cool. Yeah, so for me, we're still in a range. So I think the last time I looked at it was when we had this massive just spike up, this huge push up here, and then we got to here.
Oh, yeah.
And then I said,
I
have a short bias. Yeah, exactly. I had a short bias. I was saying, I would want to sell here. And it went down a bit, but then we had, it just reversed. It stopped again at this gap in volume right here. And to me, there's no real... we're still, for me, it's still a range. I wouldn't be long until we break above here, which is around the 90,000. Then I would start potentially looking at longs. But while we're in this we're dead in the middle between two areas. I mean, short term, it could either go up or down. There's literally no idea what it could do short term. It could either go up to here or come back down to here again. But I'm treating it like a ranging market at the moment. But I don't know. I still think there's more to go down. I don't believe this is the beginning of, a beginning of a bull trend. I think, we're pretty much in a range. My guess would be that we'll probably get to like here, and then we're going to start making lows again. But until that happens, where it is right now, it's dead in no man's land. It's just in the middle of nowhere. If anything, if we treat this as a complete range, I think what could happen is, because I think a lot of people would see the range to be from here, all the way down to about like maybe here. Oh no, sorry, here. They'll think that whole area is a range. So if we break above those highs, I think we're going to get a lot of breakout traders trying to buy the market. And then have kind of like a trap and then a quick reversal. That I can see happening. So yeah, but I wouldn't want to be bullish until we're above, I'll say about 93,000.
Yeah.
But apart from that, that's pretty much my look on it.
Yeah, it's definitely a very interesting spot, to say the least. Obviously, it's probably we got a shorter week last week with Friday market being closed. Had Easter Sunday yesterday. Today's volume isn't all the way there, so it's definitely in this weird space for sure.
Yeah, we got a bank holiday all across Europe, so only the US market's open. So today is, I mean, okay, unless you're trading pre-market, but generally speaking, I don't know, when there's like one area of the world is completely shut off today.
Yeah,
I don't know. For me, it's not worth it really. But we did have a nice move on the S&P 500 at today. I mean, it's really sold off quite well. You can literally see when the US opened, pre-market was dead, and then boom, 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 boom. But I'll be honest, guys, I haven't actually looked at this chart in over a week. Last week I didn't even open the chart, so this is all new to me right now. I'm kind of just having a look at what the hell happened.
Right.
But to me, it was pretty clear. We're similar to Bitcoin in that respect. We were kind of in a range. It broke out. This is what I expected Bitcoin to do. Exactly the same. You know, we had this huge push up with the good news on the tariffs, and then reject on this area, push down, and then keep going down, down, down. It did kind of, you know, go back up, but not as high as Bitcoin did. Never broke that last high, and then just came in for a retest, and now pushing down. So I would have been bearish as well on the S&P 500 until we get down to this area. Then I got to wait. Potentially it could be bullish, or if we break through it, then I'm again bearish all the way down to here. Then I'm very bullish if we get to this area here, about 4,400 around there. Then I'll be very, very bullish, because I truly believe that it probably won't break this area. It can do, but I think that was the area that also marked about a 20 or 30% drop or something if it got there.
Yeah.
Which would line up to all the previous crashes.
Yeah. Normal. It's a normal correction, really. Exactly.
So I would be very bullish very bullish when we get there. I'm still pretty much bearish until that happens. But that's my take on the S&P.
I got to say, for me, the rally from the low is a clear ABC rally, 3 waves, and 3-wave rallies. I'll just show you mine just to show you the breakdown of that particular move. Us people that do Elliott wave, we're always looking for 3s and 5s, and if you see a 3-wave, it's usually against the trend.
Right.
Let's just put that in there. So just going back to the intraday chart. So obviously that's the kind of correction or bear market low. Then we had the first leg up, then the kind of retest, and then started to stabilize. Then the good news on the tariffs. That's the A, that's the B, that's the C, and we've not broken through that high. So that is a 3-wave move. That's a bear market rally for me. And obviously subsequent action has proved that to be we are trending down, having not made a new high for that recovery. So this looks to be the early stages of kind of wave 3, which should take you to new lows for me. So yeah, I'd be looking to sell the bounce on the S&P and probably the NASDAQ as well, I guess.
Yeah, I'd agree with that. Absolutely.
Yeah, it's like right at that point.
Yeah. Yeah, it's funny how Bitcoin kind of it did the same thing for a while, and then it's decoupled a bit, but I think that might be some dollar weakness in there as well. I know that Bitcoin is sometimes can be a little bit. It can do quite well when the dollar is having a bad day in the office, which it's had many recently. So
yeah,
sure. Yeah.
Same on the peso. We went from I mentioned to you guys I've monitored every day, so I can see my exchange right here, but it was about almost $21, and they got down most recently today. It's at like $20 and $19 actually and 50 cents. I'm like, oh, that's a slight difference there, but when it happens, I don't get all the bang for my buck. I get majority of it, but not every piece of it. So for me, I'm like, oh man, I actually hate when it's under $20 because it's easy math for $1 is $20. But when it's lower than that, typically in times like this, when like the dollar is a little bit weak, the peso is the whole exchange is slightly lower, right? Yeah. Like when I first moved here, we had $18.
Yeah, I've got to show you. I've actually got a view on that one because I don't usually look at a lot of the so-called exotic ones, but I've got I've got a strong view on that. Let me just quickly show you my screen just to give you an idea.
Let's check this out.
what are we looking at on this thing? Hopefully it should come through.
There we go.
Okay, here we go. Let's just go back a little bit on the long term. Obviously, a long-term bull market. So devaluing Mexican over time. But for me, we completed a major top here. The kind of COVID final leg up, and from the 2020 high, we had an A leg down, a B wave rally, and then finally 1, 2, 3, 4, and 5 C. So again, one of those 3-wave moves against the trend. So the trend is up, and we've had a 3-wave move against it. So the low in 2024 is for me the start of a new multi-year bull cycle for this thing. So this pullback that we're seeing from above 21, I think it's a corrective second wave where we can look to buy into it, probably below 19, just below 19. With big support around 8. So this could be an area to think about. A kind of, the Mexican peso starts to weaken from that point. So that's kind of what I'd be looking for there. So yeah, it's interesting you pulled that one up because it's one I keep an eyeball on from time to time. So.
Yeah, it's the only one I don't actively trade like on the markets. Obviously, I exchange currency using it, but I don't actively trade it basically. Not on like the currency pairs. But funny enough, this is setting up, right? Like this would be my next move. You see the W bottom, it broke through. The next will be that retest area going back long. That will be the next cycle, like move in the cycle in essence. So
yeah, so we're in sync. We're in sync on that one.
Yeah, it's always interesting when it does happen because, like I said, when it's the higher it is, obviously the more. It's so interesting because no matter if you're paying bills in the U.S. for the most part, it's going to be the same amount. Like let's say if your rent's $2 a month or $2,000 a month, it's just $2,000, but it's fixed there. But here, that thing can fluctuate.
Yeah.
1 month you might be paying $2,000, then you might be 23, you might be 18.5. You know what I mean? So just a little bit of fluctuation there. So. And that's actually one of the things that I tell people, like, oh, don't forget that this isn't the USD where, you're going to have a base amount every month. Like, account for 20% fluctuation there on your bills.
That's awesome.
Super interesting.
How was, Howard, how was the pound today, all the currencies?
Yeah, so as I say, literally from the open, we had a big gap open and a nice run up in Asia. Let me pull my chart up there. So they've all had. So I think there was some news over the weekend that kind of just saw, and I think it's to do with Powell. The Fed. I think Trump wants him out. He's not slashing rates aggressively, kind of thing. So yeah, so this is where it closed fairly strong Friday, and then a little bit of a small gap down, and then just blasted through for most of the session. So now we're seeing this kind of corrective pullback.
Is this what time frame?
So 134.20. Oh, this is 13-minute. So 130. So the pullbacks have been very shallow on. Yeah, I mean, check this out on the daily. It's just been. I mean, I've been talking about this thing accelerating, and the pullbacks being shallow because we're in a third wave. It's literally we had because I think we were looking at it during this range, weren't we, for quite some time, getting really bored of it. And then we had the initial blast. We had the blast higher on the initial bad news when the stock market fell out of bed, etc. And then it reversed course, and now we're starting to see the trend really kick off.
Super interesting.
So yeah, I mean, there's a lot of green days there. These are daily candles. Just hardly any red, hardly any red in there at all. I think on one day did it actually break through the previous day's low. Just it's that strong.
That's a really strong rally.
So yeah, same with the euro. It's just a broad-based dollar weakness.
Yeah.
Yeah,
Well,
so the
yeah.
euro, obviously, we kind of same thing, just massive selling. It's like a big figure down or a big figure up on the on the open. That's very rare that you see that kind of stuff. And as I say, usually when you get that kind of move in Asia, it's usually best to stay out the way, because you'll get quite a big pullback against it eventually. Once the it's a bit like one of your opening gaps on one of the exchange traded markets, where you get a big opening gap and then suddenly everyone buys into it and then you get a reversal. So I think you've got to wait for that reversal to play out before you can really start to get stable trending action, if you will.
Yeah.
So yeah, I'm just I'm looking for. Yeah, I'm looking for, obviously, but yeah, I'm still bullish. I've marked areas of support which I want to monitor probably tomorrow, I would say, for basing to have another crack at this uptrend.
Absolutely.
So on you, yeah, you're a bit of a consolidation here. 1455 to 1485 or so. We've got a little congestion here. So that'd be a kind of area to monitor for me for longs. On cable, sterling dollar, again, just a little bit lower on that one. Oh, we got here we go. A little bit lower on that one. Yeah, so we've got a kind of a swing correction, and then we're kind of seeing a deeper correction now. So it's kind of typical stuff after such a big Asian session range. You get a big move, and then they realize, they get a bit too excited, and then you start getting some profit taken, and then you get the pullback. So again, I'll be looking in the kind of mid 133s probably tomorrow to have a crack at the long side on this thing.
Nice.
Certainly wouldn't want to short it. It's like a steam train. You don't really want to be selling into these things until you. It's just
no, absolutely not.
I
mean, if I pull up,
anything you're seeing on the pound on your footprints?
Yeah, if I pull up the chart real quick.
Robert said Sam's back.
Yeah.
Yeah, Sam.
Hey, Robert. I am back. Good to see you again, Robert. Yeah, where was I? Right, yeah, I remember now. So we had, that push up, and then I had two things can happen. Either we can reject off this area again, like we did last time, or we can break through, retest it on the other side, and continue. And that is ultimately what happened. Then it broke through. I mean, you had a little bit of a rejection. You could have had a little scalp, right off that blue. Those blue lines are exactly where the gap is, basically, because this is a large area. Had a lovely little, perfect little short there you could have taken down to, these lows maybe. But eventually we broke through. And when we did, we came back into it, and boom, the move made its move. So, yeah, I'll be bullish as well. In terms of, where's the next potential area? Oh, wow. Oh, we're really high up.
Yeah.
Oh, we have to go back a long time now. Oh my God.
I think 137.5 or something on the big chart. Yeah.
I'm gonna have to pull out the weekly chart. I haven't used the weekly in a very long time. Okay. Gonna have to get some more volume data. Let's have a look. Oh wow. Okay. Yeah, there's no gaps anywhere. Oh, that's not good. All right. This is going to be very hard to trade if I was to trade it. The next gap would be here then, which just lines up with general structure anyway. So I think that would probably be, that's really far away. Yeah, I'll be bullish for a long time now. Yeah. I mean, we do have the point of control here, which is going to create a bit of sideways movement. But apart from that, yeah, I'll be looking at being bullish for the indefinite future until something happens, until a clear reversal happens at some point. But I'll be looking at being bullish. There's nothing above it that's really frightening or anything like that. So that's pretty boring, but
yeah. I mean, on the daily chart, how it did that kind of V-shaped reversal, you know, it literally, it just, you know, it had a couple of days down. It looked like it was the end of the world. It was, you know, that was the end of the uptrend, like gold, you know, and then suddenly it reversed, and then boom, 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 boom. Every single day it's up. And that is that's typical wave. That's like wave 3 action. That is acceleration.
Absolutely, 100%. Yeah, I think you're absolutely right. We're just going to be entering a nice, I'll say, longer term bull trend. You know, something similar to something like this. You know, there's going to obviously be down days and whatnot, but generally speaking, I think we're gonna be entering just a nice steady bull trend. But yeah, that's awesome. Wow, might start trading the pound soon. Who knows? now that I got clear direction, it's actually be quite nice to trade probably. In terms of
it's funny. It was stuck. It was stuck in that range for for a couple of weeks, wasn't it? It was just.
It was because I remember saying I wasn't even looking at it really. I'm like doing the same markup on it every day. I'm like, this thing's still just sitting here.
What I can do is actually now start looking for pullbacks of where to basically buy in. So if I grab the volume just from here, oh yeah, we've got a lovely gap right here. Because I don't think it's going to be breaking below these lows now. So the next area where I would expect a pullback would be, it's quite a big area, but anywhere between there. Could probably narrow it down a little bit. Let's make it 50 so see a bit clearer. Oh yeah, here we go. There's the gap. So into there, that would be a nice nice little push down to here and then a continuation. That would be, I'll be looking to buy once we get into there. There is another tiny little gap above it, but I'll be waiting for the more lower, better one. Should have a better reaction. So that'll be awesome. And in terms of
squeeze it out.
Sorry. Yeah, exactly. Absolutely. In terms of the footprint, well, today was obviously bank holiday, so I'm not expecting big numbers here, but might as well just look at the US Open, really. That would be the only time, the only people trading in the world. And yeah, I mean, the numbers are all tiny, as you would expect, really. There's nothing.
Nearly no volume.
Even a little bit of heavy selling came in at this candle. But apart from that, very boring. It would be very difficult to trade low volume like that. Just because you'd probably fall asleep by the time anything happens. So yeah, there's really nothing on the footprint I could really point out to be like, oh, look at that. It's all just very, very small numbers. So yeah, footprint's boring, but bank holiday, I mean, it's to be expected. Tomorrow, though, should I don't know what news we've got coming out tomorrow, actually. Let's have a look on the calendar. No major news, but at least there's no holidays, so should see something, hopefully, tomorrow. Some nice moves down, get into this area.
I guess there'll be a lot of people that missed. Yeah, I guess there'll be a lot of people that missed it today and thinking, I've got to get into this, and that'll probably support it tomorrow when it it eases back a bit.
Oh, absolutely. Yeah, no, 100%. But yeah, boring market today. We still got an hour on this live stream, and we're like,
I got something. I've got something of interest. Crude oil, West Texas, bit of NYMEX crude. This one, let me share my screen there, because again, a bit like Bitcoin, it was doing the same kind of thing as the stock market, but then it kind of decoupled for a little bit. So we've broken above the kind of recovery high that we didn't break on the S&P. in a kind of similar vein to Bitcoin, I suppose. But we are kind of rejecting above 64, which is on the big chart, the broken support from that descending triangle. So I think we're getting into an interesting area now to perhaps have a crack at the short side on a multi-day perspective. So this is we've got the broken support there, descending triangle. So we're literally sort of doing the retest, the typical retest. So it could be a good low risk short entry, I think, for new lows on this thing. So just I'm personally I'm waiting for this thing to for the rally to kind of run out of steam. I suppose a little bit similar to Bitcoin. I'll probably get the signal when I get the same one on Bitcoin. I think they're going to be, once the stock market really does start to go again, then these things will be dragged down with it.
Yeah.
So yeah, it's had a little nibble at the upside, but it's really struggling. Maybe there'll be like a double top type thing on the short term chart, a little push up and then starts to come down again. But certainly there's big selling once you get above this recovery high. There's a lot of resistance that the broken support that comes in there. So that's a little bit boring at the moment, but that could start to get interesting, I think, once that plays out.
Yeah, absolutely. What about let's have a look at the euro. Maybe the euro is a bit got something else going, but I'm assuming the euro and the pound are back together again.
Yeah, pretty. They kissed and made up.
Yeah.
Yep.
Oh yeah.
Yeah. Yeah, they kissed and made up. Yeah, nice. they fell out for a little bit, but lovers tiff, But yeah, for me, still long term. The long term thing is we're in a third wave on the big chart. On the big chart. Major cyclical low back in 2022. First wave up. Then we had the second wave A, B, and C. 3 waves against the trend, and now we're starting to see what the trend really is all about. And this is kind of a third wave, which I think is going to take us much higher. Yeah, we're in the acceleration phase, in my opinion.
Yeah, absolutely. Let's have a look at. If I just pop up the euro. Okay. Let's have a look. Yeah, it's kissed and made up, as you said. Let's see if there's anywhere in the euro we could see a bit of a rejection, maybe. Or is it similar to the... Oh, I've got it up on 50, I wonder. Let's drop it to 15. Yeah, there's no gaps. We've just broken past the last gap on the euro. Exactly. Oh, we're actually in it. My bad. But, oh, okay. Let's drop down to a lower time frame. Actually, 1 second before I mark that out. Let's find out exactly where the actual gap is, because we could have broken past it. Just so this is the end of the gap, and that's where the volume starts again. And yeah, we've broken past it. So let me just have a quick look on the 15. We're kind of like retesting it. Yeah, I mean, we're still kind of in it right now, but I'm going to assume it's going to be similar to the pound, and we're actually going to, we might go down a little bit and then continue going up. But apart from that, just zoom out. There's nothing. The last area where we had a bit more highs was all the way down here. This is a long time ago. Oh, what the hell happened there? Oh, I don't know. TradingView doesn't seem to want to be drawing the volume profile. What's going on?
Of course it does.
It's playing up today.
Well, that's just wrong. I want it from up here. What's going on? Okay, well, that would be impossible to trade for me. I'd be blind. Oh, there we go. It's doing it. Wouldn't change it to the weekly, which is fair enough. And then got a small gap here, which kind of lines up. Yeah, similar to the pound, really. Got a few areas, but very similar to the pound. what I can do actually is extend that all the way over, because that's been filled a long time ago. And then the next area would be, yeah, all the way up here. That would be the next area, similar to the pound. It's just gonna, yeah, they both line up. They both seem to be in the same kind of, I don't know, consensus. So I would have the same, what do you call it? Same
outlook,
sentiment, outlook. Yeah, exactly. And we have another gap there, which is basically lines up to the one on the lower part as well, which we're in. But yeah, awesome. Well, euro and pound, I would say we're looking to go up, up and away.
Yeah. And on the currency side, even the Aussie and the Kiwi have swung into line after the. I don't know if you recall, we had when the first bit of bad news came out, they collapsed, whereas the dollar went, the euro and the pound surged. So they went in opposite directions to what they should have done in terms of the US dollar. But since then, they've kind of, they've all made up as well. Let me just show you the
pull it
Aussie
up.
and the Kiwi.
It's like the dark days are over.
Yeah, it seems like it, right? Like just a little bit. We might see some light at the end of the tunnel here in a bit.
Oh, my bad. There we go.
There we go. That's bit of luck coming through there. Yeah. So that's the Aussie. So it was in a kind of a stable, it stabilized after the long downtrend, and it looked to me like it was going to go with the euro and the pound, but obviously the news came out, and then there was the knee-jerk reaction to sell both the Aussie and the Kiwi against the US dollar. So the dollar collapsed, but there again, so did the Aussie and the Kiwi against the dollar. So these were really underperforming for a couple of days. But then we got the V-shaped reversal, and we've got a broad-based dollar decline. Everything is all the major currencies are kind of in a downtrend against the US dollar now, whereas these ones kind of they kind of bucked the trend a little bit while the stock market was under pressure. They seemed to be a bit of they were kind of a bit of a target when the stock market was having tantrums, but now we're seeing some real broad-based selling. The Kiwi, I think, is ahead of the curve compared to the Aussie. Here's the Kiwi here. So the Kiwi, that's the same move as what the Aussie did. So down, and then people realized, no, maybe the dollar is actually going down. So then it reversed, V-shaped reversal, and here we go. We've taken the last few sellers out of the market, and the real trend is showing itself. So yeah, dollar downtrend, broad-based. Don't really want dollar Canada had that. We were monitoring that descending triangle, if you recall, which I had as the second wave correction. So that was the first wave down. There was the second wave correction of it, and then we just went into that kind of range with the lower highs, kind of thing. And then eventually that broke down. We got a retest, and then down it goes again. And now we're just in bear mode, basically, finding a bit of support down here. So again, just looking to sell bounces in this one and buy dips on the Aussie and the Kiwi. So it's the same story for me. It's broad-based dollar downtrend and just looking to sell dollars on decent bounces, really.
Yeah. Awesome. Yeah.
I mean, I can run over the pound really quick. The pound and GJ, not too much going on, but what I've been kind of waiting for. We can touch on. We already touched on Bitcoin, so I need to really touch on that, and then I can touch on gold really quick, and also.
Oh yeah, gold. Gold's a good one. I forgot about gold.
FJ, I think FJ. Yeah. So cool. Robert, everyone, we had a great Easter. Hope you did as well. We are back in action, even though the market's a bit slow today because of this bank holiday. Tomorrow we should be fully back in action.
Too much. Too much chocolate on my side, but hey.
It's a good time to buy Easter eggs now. They're all going to be at major discount.
Yes.
You pick them up to next to nothing.
Yeah.
Stock up on chocolate.
Yep, that's how it goes. Sweet. Well, you guys already know once I get this huge 5,200 cross here, I am long, right? But for something to actually take it, little things need to happen here, right? So 5,200 cross. I know I am in level 2. I know I'm looking for M or W off the 200, right? So at this particular point, I am long. However, I need some interaction off this 200. You guys see, once this 5,200 has crossed, price has not touched the 200 since, right? So for me, as you guys already know, in the actual cycle of it all, it in essence needs to come back and touch that first before I will be even interested in it, right? Just how I always draw this same diagram, right? So let me take this off. I'll do it here. So yeah, this is in essence, this is the 1350 cross here, right? You know, you're in level 1. So we do 1350 cross, 50 cross, level 1. And then you're looking for a bounce in essence. That's basically what you're looking for in here. And on this next one, which is where we are now in here, right? Now you know you're looking for, once you're in level 2, after the 5,200 has crossed, you know you're in level 2. You're looking for M's or W's. Oh, W's off the 200. Right. So I know, as I always say, I know exactly where I am in this cycle with this being said, right? 5,200 cross. The next thing that needs to happen for me to even be slightly interested into pound is for this to sell off. I wouldn't try to catch this going short either. That's not my move. My move is I'm long. So, right, I'm going to the upside. I'm looking for something like that. My stops will be below this 200 EMA. My TP would be a close above my entry be a close above the 13. And then my TP would be somewhere targeted to these highs, bare minimum, right? That would give us a decent amount of something. Maybe not this full exact thing, but yeah, that'd be a nice little 3-for-1 nearly, right? So I can tell that, again, I know where I'm in the cycle with the 5,200 cross. I know I'm in level 2, so I'm looking for W's off this 200. If this doesn't happen, I'm just not taking it. If this happens, I'm all over it. Just that simple, right? So for me, pound isn't too much just yet. So I'm just kind of hanging out and just waiting. And again, that's just the chart. Additionally, to give me the extra confluence on my TDI side, I will want to see this come down. So once we have this drop down on the chart, on the TDI, this will simultaneously come down and give me that infamous reload that I always talk about, right?
Yeah.
I really, really, really need price to come below here and basically activate those short orders, trap those traders, as we always say. So there's orders going short below this 200, right? So I need them to come on down, activate those pending orders short, make that little W pattern, and then go long, right? So
it would be nice. It would be nice. The trouble is with this move, it's like the pullbacks have been so shallow. And you know, you kind of by the time you get the pullback that you really want, you're buying it to, you know, you're buying into a deeper correction. It's I think that's the way it is. I think for me, I like the idea of just playing the shallow corrections and just getting a piece of the trend as you can, kind of thing.
right.
But yeah, different strokes, you know.
Yeah, for sure.
Yeah.
And now this is just my system with the 50 coming off the 200. Now, if this was to come down and bounce off the 50 and make this same move and then do it, I wouldn't take it. Because if it made a move off the 50, I have no setup for that. That's not a setup for me. That's not a trade. It would need to make the move off the 200, right? Now, it could easily come down to the 50 EMA. Let me zoom in a little bit, right? It could easily come down here, make a shallow bounce, as you said, and maybe, just maybe, bounce off the area right here or something. It could easily do that. Come bounce off this area and then make it. If that happens, I would just miss the move. I wouldn't be a part of that. I wouldn't even know what to do with that. That's not a a setup. Out of my 5, that's not even a setup for me. But yeah, that could totally happen, right? That would be the next point to actually bounce off of in essence. We got this high over here. We got this blue tracer. This wouldn't be a bad place to bounce off of this at all, actually, right? Like that would be ideal. And I'm sure once it gets to this price, a lot of traders will jump on this, and it probably will take off. Especially since I'm saying I'm not going to be part of that move. It'll probably definitely happen. That's how they do it, right? Like, oh, I'm not going to take it if it does this. Oh yeah, great. But that's exactly what we're going to do.
typical market.
Yeah. So yeah, if that does happen, I'll just be an innocent bystander just watching it if it was too.
That's it. Don't be the first.
Yeah.
Oh yeah, Mike. How's your sterling dollar algo doing? Did that do any trades last few days? The open.
Yeah,
open
it actually did. Like, right. So like it's I'm trading GU and GJ on it, right? And it actually did. I'm only up 0.25% on one of them. So, I think I mentioned this to you, right? Like literally January 31st. I'm sorry, the January 1st all the way until March 31st. This thing took 1-2 trades a day. Like GU, GJ, it took 1, sometimes 2 trades a day. Very rarely did it not take 0 trades. Soon as April 2nd comes around, guys, with this tariff things comes into play, this thing is now taking trades every maybe twice a week. And I'm like, what in the world? What's the chance? What's the chances of that actually happening? But I will say it is working perfect because part of the system is, and I'll just show this really, really quick. Part of it is it can't take trades outside of, let me see, where is this? Yeah, here it is, here, right? So this is a perfect example. I still even have this on here. So this is like the end point to starting point, or the starting point to end point, right? This is like what I'm looking at. And it's just a regular breakout strategy. But what happens is this yellow line, so this is obviously the low, the red one, the low of that section. This is the high with the green one. And then the yellow one, I have the ATR high, and then I have an ATR low. If the TP is further than this, then it can't take it because it's based off the ATR from the previous day on the daily. Yeah. And what's been happening a lot lately is, now this one doesn't count. This one hit perfectly. What day was this? The 25th, right? So April 25th. So, oh, I'm sorry, 17th. I'm like, April 25th didn't even come yet. The 17th. The 17th, right? So this happened. Yeah, I'm playing future. So this happened on Thursday. Right? And this was perfect. I mean, it literally was super simple, nice, easy setup. It banged it like very quickly, actually. Yeah. But what tends to happen a lot now is because of this, the range is if the TP is within, like before, on the upside or the downside, if it's before the ATR from yesterday, it's good to go. It's a trading day. However, if it looks something like this, where the TP is exceeded past the ATR from yesterday, it's a no trade. And I swear, guys, this happened since April 2nd, like 10, 12 times. And I haven't seen that happen maybe twice in 3 months. And it happened 10 times, basically, since April the 2nd, which is crazy.
Yeah, volatility has exploded.
Right,
so that's kind of messing with the short-term stuff, isn't it? Yeah.
It has. I mean, big time, guys. So it hasn't been as active as I would have liked it to be. It has been Q1, right? Since January to March, but it's okay. It's only up so small. I think it's on a $50,000 account. I think the thing is up $277 right now, and that's it. So kind of sucks a little bit because I have. Yeah. I'm just hoping to just go ahead and just calm on down with, like the swings and get back to regular volatility, and I can kind of really see what it's going to do. But for right now, it's slow, turtle slow.
Yeah, I got one of I've been kind of building for a while on the euro dollar. Let me just show you what we got on that.
Yeah, let's check it out.
It's it's a combination of breakout and false breakout. So to give you a bit of an idea what it does. Yeah, so each of these things is like a session. The pink is the early range. So it's a lot of it is based upon breakout of early range or break back into it, that kind of thing, false breakout. I think Sam, you'll be kind of familiar with that kind of stuff on the stock index futures. There's a lot of that goes on.
Yeah.
So essentially, I've got a number of different sort of components that I've got in there, and it uses ATR. It basically, I use 20-day ATR, 20-day, because that seems to be a bit more stable than 3 or 4 day ATR, because obviously particularly recently the ranges have been so big, and it sort of stabilizes it a little bit. So you've got this kind of where is it now on the ATR?
And you're building this yourself?
Yep.
Oh man, you're a genius. I'm too slow to build something like that.
I don't know about that. But yeah, it's got 10 years worth of data on it.
Wow.
Okay. And so yeah, it literally takes maybe 1-2 trades a day maximum. But they kick off from the start of the European session till I think around, well, the entries can be taken till around 4 o'clock my time, 4 o'clock Central European time, I guess 3 o'clock London. And the exits by the end of the day, by the end of the global session. So it goes into the US session.
Nice.
But so far so good. In terms of how it looks in terms of equity curve over the 10 years, you've got that. Actually, you can't see it right now, but let me stop sharing and present it. So where is it? Let's try that.
No, that's super nice. We got a lot of similarities too.
Yeah.
Like
I seem to have a bit of trouble sharing my screen. Let me get rid of this other thing. I've done this. 1 second. It will come. Now let's try this. I get rid of that, and stop sharing and present. Let's try.
Yeah, I'm like not smart enough to build something like that. I have to get someone.
Wow.
All right.
I'm like, look, I'm the trader. I don't even know. I turn into a infant 4-year-old when it comes to building stuff like that. I'm like, wait, what?
Yeah. Yeah. So that's the equity curve over 10 years, which is not too bad.
Nice.
That's beautiful. Look at that.
It is.
You never had any major dips, really, I'd say, as well.
I guess the draw. Yeah, the draw. This is over 10 years. So how long are the drawdowns? So like maybe a few months, perhaps. April to May. That's 1 month. This one's a long drawdown. February to May. Yeah, a few months you'll get drawing down, but on balance, this is like the P&L distribution on a monthly basis over the 10 years. So the green is like a positive month, red is negative month.
Nice.
So you get the occasional down month kind of thing, but it's more the exception rather than the rule, I would say.
Sure.
What's the average like drawdown on the period?
Yeah. So let's just so maximum. So the total net profit over, this is all hypothetical, obviously. So 467,000, and the max drawdown was like 19,000 over that 10-year period.
That's
So
decent.
obviously it depends on the size of your account balance, etc. What percentage that's going to be, but it's all, I think, quite well contained. And
very nice. And you built this on TradeStation. You built this.
Yeah. I'm a bit of an easy language whiz. Yeah. So I'm using I'm coding it in easy language.
Right.
So I'm not a rocket scientist by any stretch of the imagination, but I can do enough to tell it what I want it to do.
That's great.
I built one as well, but I built it on MetaTrader. Well, I didn't build it. I hired developers to build it for me, but because I couldn't code it myself, obviously. But oh god, it would work and it would be really good, and then it would crash, and it would just crash and crash.
Yeah.
And I'll boot it up. And then they were like, "Oh, you need a VPS. Like, you can't run it locally. You need to get. We'll get you a server and everything." Bought server, got a VPS.
Yeah.
Still kept crashing. And to this day, they're still trying to figure out how to make it work without crashing. Because I think the problem I had was I was trying to extract loads of data from the futures market.
Yeah.
And MetaTrader doesn't really have that data. So I was using a third-party plugin as well to kind of get that data. So I've got all this data, like all these other third-party places, you know, trying to talk to each other. It's just a complete mess. Like, but it was a really nice, like, when it worked really well.
Yeah,
maybe I'll try TradeStation.
I guess being a foreign exchange guy, my challenge has always been because TradeStation stopped doing FX, you know, a number of years ago. A lot of my venues have been MetaTrader as well. So I got somebody to actually create a bridge between TradeStation and MetaTrader, so that when I got a signal or an open position in TradeStation, it would instantly hit MetaTrader. And that has worked quite well. That's been quite a good. A good investment. But anyway, so this is sort of stuff I'm doing in addition to the Elliott wave and all the rest of the stuff, which is much more discretionary. Obviously, this is more systematic, where it's just kind of like, this is where you got to buy it, this is where your stop is going to be, this is where your target is, this is when you're out in terms of time, that kind of thing. And for me, I love that aspect where you know the drawdowns, you know, over a long enough period. You know that every trade is going to go into a drawdown at some point, but you never know how deep it's going to be and how long it's going to be.
100%.
But when you've got something like this behind you, you've got a good idea as to how low is how far down you're going to go before you come back up again.
Yeah,
for sure.
No, that's really awesome. That's really, really awesome. Yeah, I think I'm going to try a different platform. I was thinking maybe even TradingView now with Pine. Is PineScript or something TradingView?
Yeah, I've not looked at that. I don't know how easy or hard or difficult it is. I'd say I'm not a rocket scientist, but I wonder if it's easy.
If you're not a rocket scientist and you can do all of that, I wonder what I am.
Get away, misspent youth.
I have no coding knowledge, experience, or nothing. I'm like Sam. I will find, my expertise is finding somebody how to do it. I'm a master delegator, I swear.
Sometimes that's the best way.
I learned a little bit because the problem I had is every time they sent back a version, and then I'll be like, oh, can you just change this one little calculation? You know, I want to try it out with this. And I kept wanting to like back test with all these different like tweaks to the calculations and to all the math. And then it will take them like a day or two to send it back. So it's like, maybe I could just learn how to like change the math inside the code. So I learned how to like do like basic MQL5 like coding. It actually wasn't that hard to learn. It just looks a lot more like, it looks more difficult than it really is, but actually it was not that hard. And then I could like modify it and tweak it to how I want. But all like the main stuff, like, they built like no idea. I mean, absolute no idea how they built that stuff. I can never understand a coder's brain.
It literally looks like another language, right? Like learning trading, for me, Spanish is almost like, all right, that's as far as I'm going for right now, right? I don't want to go any further than that. I don't want to go any further than that.
That's awesome. But it just goes to show, like, we all manually trade, but then like the automation part, there is a place for it. Even as a retail trader, I think. Yeah, you know, it's good.
They got a lot of open space for something like that, right? And like, again, when I say when I got him to make this, they have to make it from January to March. I don't actively trade that system, but he swore by like this would work. So I was mainly trading it and also just looking at the days that I wasn't there. And sure enough, the days that's the trade that I would have taken on how it's supposed to do, this thing was freaking spot on. So over time, I was like, all right, he's clearly on to something. There's something here, right? And then when that happens again and again and again, I'm talking about, I think it took 62 trades. Out of the 62, like 55 of them were spot on. I'm like, all right, you win. There's something here. We can move forward with this because this is clearly you know, profitable, and we can make something work with this. So, but again, he's a dev, right? And he's not a full-on trader, so he can't really explain certain things to me, as far as just like I can't explain certain things to him. I'm like, dude, I don't code, I don't know what, but it's supposed to take it here and not there. Or this is supposed to be a no trading day because the ATR is exceeded. Like, why did it still take the trade? Like, I can't explain to you why that's like that, but on my side, I can explain to you in my language, and you got to figure it out from here. Like, make some code, program it, whatever, to make it not.
Yeah, there's some kind of gap between the skill sets, isn't there?
Yeah.
Absolutely.
Yeah.
Absolutely. Yeah. Yeah, I experienced the same as well. Trying to explain like certain, I wouldn't even say trading concepts, but just trying to. I don't think I'm the best at trying to explain something as well. I don't know why. I'm just not very good at like trying to explain it in layman terms. But eventually you got there. Like I mostly did it just by recording. Like I'll pull out a whiteboard and then just literally like draw and record with my phone and be like, that's what I want it to do, this calculation. And it does, and then they got it. Like
right.
But it's taken 2 years to get to this point, and it still isn't ready. I mean, it is insanely time consuming. I hope, fingers crossed.
Yeah.
But I think I might dump MetaTrader. I just don't think it can. There is no solution. I think I just need to go to a different platform. That's the solution for me.
Yeah, you wouldn't do anything on TradeStation, or is it's got the venue is MetaTrader, the trading venue?
No, I don't know why I used MetaTrader. I think it was just because at the time when I started, everyone was like, "Oh, MetaTrader, you know, it's like a big platform." There was so many developers for it, so I kind of, all right, well, if everyone else is using MetaTrader, I'll use MetaTrader too. That kind of because I didn't really want it to automatically, like it can. It's been built in, but I didn't want it to automatically execute trades. I can switch it off, like switch it on to actually trade as an EA or just be like an indicator. Because I was a bit weary about it. Just like, what if it just, I don't know, something happens, a bug or something, it just decides to, I don't know, enter the wrong lot size or whatever, right? Yeah. Like I wanted to kind of like look over it and actually be the person to push the enter button. Do you know what I mean?
Right.
That makes sense. You got to trust it totally, haven't you? You know.
Yeah.
All it takes is one glitch, and you're losing loads of money.
Yep.
This is like I wouldn't be able to sleep knowing it's well, it wouldn't be trading at night, but like I wouldn't be able to relax knowing that the system is just running and kind of like handling my money. I'd be a bit scary.
Yeah.
That sounds like me. One of the first things I do when I wake up in the morning, because this thing's attached to a challenge account now, I'm like, all right, did this thing lose? Did a glitch happen? It's the first thing I check every day.
Yeah.
Like, no.
I think for Howard, it's okay because Howard's got the coding mindset, right? So he trusts in his coding. He knows what he's doing. Like for me and you, Michael, it's like magic, right? Like we don't understand how this stuff works.
Alchemy, bit of alchemy.
We just have no clue how it's doing, what it's doing.
Agreed.
You've got to trust it.
Agreed. And then as manual traders, right? It's like, well, yeah, that's the last thing I'm trying to do is just trust you. Like I know the markets are dynamic as you know what. So like, no, that's not how it works. There's no way. But it would be the best thing ever if you could somehow get it to work and you go to sleep and not have to tan. You're at the beach, right? Or some exclusive beach club or some island or something. This thing just that's a real live money machine.
That would be a dream come true. Absolutely. So Howard, is your one more like swing trading as well then, or is it intraday? What kind of
really just for the intraday stuff. So to literally breakout and false breakout, just levels based and pattern based kind of thing, trigger levels. That's all it is really. Nice. Just generally speaking, buying strength, selling weakness, looking for a momentum pop, and just grabbing the profits kind of thing. So it tends to be the one I showed is I think it's like 66% hit ratio. or so, which I think it's okay. Profit factor 140, 150 or something, and that's over a 10-year period. So yeah, it has good periods up and some drawdown periods, but I guess you have to expect that. You can't. I don't think there's any such thing as a holy grail system, because I wouldn't trust it.
Yeah.
No.
Yeah.
Did you ever find, like, on some days, like on your one, like my one was when it was, to be fair, it crashed all the time, but when it wasn't crashing for like a few hours, like some days it would do really well, like almost, like we're talking almost 100% hit rate, like so good, and it would execute a stupid amount of trades because it was a scalping one. And then other days it would be like the opposite, but do you know what I mean?
Buy high, sell low.
I'd be like, what the hell is going on? Like, why is there such a difference between that day and that day? And then, like, there were certain things I was able to figure out and kind of implement. And
no martingale.
No, definitely not that. Definitely not that. No martingale. Absolutely not. But
it's like my old boss back in the hedge fund days. He sort of said, "Just give me the good trades. I don't want the losing trades. Just give me the good trades."
No, it's always something. But now I think we was talking about it one day, right? And we were just saying, like, it's good that we've been experiencing, and kind of dipping our foot into this, because not to say that manual trading will be obsolete one day or become a relic, but it's good to add that extra level of what's going on. You know what I mean? Because AI is getting really good nowadays. This thing can aid you to the point where, you might not want it to take the trade for you, but hey, this is what I want it to look like, and send me a text message or send me an email or an alert, and then let me overlook that last little button. If I think that's right, then I'll click the button, right? Like, you can automate some of it, if not the entire thing.
Yeah, that makes sense. And that
you can have a hybrid version of it, like manual, all EA, where you don't do anything manual, all manual where there's no EA, but you can have that hybrid, that mix too, right? And kind of find that even kill mix there too.
Yeah, and I think that hybrid thing gives you the control that if there is a screw up on the in the code or whatever it is, you're there to to say, no, don't give me any trades. I'm not going to take any trades. So it's quite nice. It's quite good to have that that overlay kind of thing.
Yeah. Or just send, like I said, send me a message. Do you want me to take the trade, and a picture of what it looks like or something? Like, yes, that's exactly it. Yes. And
Makes
boom,
sense,
you're in there. You know what I'm saying? Versus I wake up and you took 31 consecutive losses in a row and blew the account. Like, what just happened?
I had that actually built in, connected to Telegram. And then it would like literally send me a message on Telegram and be like, here's the trade. I'm like, okay, nice. But I found it was the volatility that caused problems for me.
Yeah.
When the market got too volatile, it just wasn't fast enough to track every contract and everything on the depth of market as well, because it was trying to track every layer of the depth of market and cross-reference it with executed contracts, and then kind of build a picture from there. And when the volatility got too high, it would skip, so like it just wouldn't be able to track it quick enough, and then it would create false signals and do all sorts of random stuff that it shouldn't be doing. And then it would eventually crash, and then everything will. And the problem is, when it crashed, it wouldn't get out of the trade. So if you were in a trade and it crashed, you're screwed. You know what I mean? Like, and there was no way of it like sending me a message on Telegram saying, "Hey, it's crashed."
Right.
So I was
send you a message with an SOS signal to your phone.
Yeah. So
I found a save our trading account signal.
I found a bit of success, like just running it on pre-market, because the volatility was lower and it seemed to like be more stable. But I found that it was literally just the issue I'm having was it was just too slow. It wasn't powerful enough. I don't know what the coding term for that is, but it was not efficient enough. It needs to be. I don't know, but I think it's because it was connected to so many other third-party platforms, not platforms, but third-party to get all that data through. It was just, so I need to rebuild it from the ground up, I think, unfortunately.
Yeah. Sounds about right.
It's a shame. It's a shame because, like you said, it's the dream, just having something run for you. And I'm confident it can work very well. It just needs to not crash. And
Right.
Yeah.
Right.
Getting the technology side right. Yeah.
what can you do? That's it. That's it. I was about to invest in like a massive setup, state-of-the-art gaming PC and all this. Like there's no point. It's not your computer that's the problem. It's like servers and whatnot. That's trying to like gather all this data. That's the issue here.
Yeah.
I'm like, give me a bigger server.
A lot of
like we can't.
Yeah, it's definitely a lot of like trying and repeating and then testing it and this and that and this and that. Like even when you mentioned the VPS, right? Because that was something I was doing at first. I was leaving my computer on, and eventually it would go to sleep, right? And it would miss it. And I'm like, all right. After this is all right, we need to do this now. We need to do that. We need to do this. We need to do that. I'm like, all right, dude, I'm about to give up on this. All right, this is way too much. We need to do this. It sounds like it's not working. That's what it's looking like. It's not working.
Yeah.
Right. But yeah, we finally got it onto the VPS, and it had like a good 2 weeks. And I'm like, oh, about every day I'm just expecting something to go wrong. But he's saying we need to do this now. I'm like, okay. And it just kind of stopped happening eventually. The most recent thing was, as you guys know, sometimes there's like major red news at 2 o'clock exactly in the morning. And the way the system is set up at 1:55 is the last 5-minute candle to where it's the period is over with. Now, after this, it can start taking trades. But if that 2 o'clock candle comes in and it's a huge candle, it messes up the whole thing, right? Like right away. It just makes it wrong. And it's like, all right, we need another tweak in here where either one, it can't take trades if there's high news like that, or two, if the candle is freaking 30, 40 pips, it's just a no trade. Like, right, we can't take it because now it almost overrides that whole ATR thing with the risk to reward part, and it just messes up the entire thing. So after about 3 weeks of messing that up, we finally added something else to it.
Yeah, I know. With my stuff, you can say if the day of the week is Friday and the time is 15:30, do not trade. You can cut things out. You can look at when is non-farm payroll coming out. You can say, right, don't take a trade on this day. That kind of thing.
Yeah.
There are lots of things that you can do with the code. Time of the day of the week, that kind of thing, even month of the year if you really wanted to.
Right.
But it's quite it gets quite in depth.
Especially if you don't know what you're doing, like me. Like I'm telling you guys, not even exaggerating, out of a 10, I'm like a 1. Like, right? I'm like that low on the totem pole of how this needs to go is ridiculous. Like I feel like I'm a genius, but then as soon as I go to code and I turn into like an idiot. I don't even know what is going on, what's being said. I don't know at all. I don't know what is happening right now.
Yeah. No, I feel the same, honestly. It's a whole new world, but luckily there's smarter people out there who are available for hire. So
right.
No, your time is better spent, doing what you do best. I think that's the best way to. That's what you should.
That's what I say. I'm like, dude, I will gladly pay you whatever it is to make this work, but I can't do it, and you can't even ask me too many questions because I don't know. This is what I know. This is the information, and ask me basic stuff. Ask me, questions like speak to me as though I'm a child. I'm 3 years old and you're speaking slow. Don't use this jargon and these words that I've never heard of before because it's gonna give me a freaking headache. Like you gotta put the coaxial cable behind the accelerator and turn off the. Like, what the hell are you talking about? I have no idea what you're saying right now. Like, dude, stop.
Yeah, flux capacitor.
Yeah, there you go. The flux capacitor. There we go.
Well, your system doesn't have a flux capacitor?
No, I
had 2 of them. Just in case, I put 2 in.
Two flux capacitors, yeah.
It's good risk management, that is.
Yeah.
So we got to figure that part out, but
I can see the more high frequency you go, the more potential you've got for something not to work. I think, as you say, too much data, different servers, and if it's low frequency, then it's like it's not, too complex. I don't think.
Right.
See, another issue I had as well because I'm tracking, well, my software was literally tracking like the depth of market, right? Which is not saved, that data. It's not tracked anywhere. You can't just access the depth of market data from, I don't know, last week or something. So there was no way of ever back testing it. You can only ever forward test.
Oh, yeah.
So every time a version was built, I had to let it run, wait for however long, but then eventually it would crash. Because whenever it got a little bit too volatile for it, boom, crash. So I could never really like forward test for long periods of time. Like, it was very annoying. It was just so annoying. Yeah.
Always sucks.
But
Like
like a few hours it ran. I was like, wow, this is great. It worked really well.
Yeah, for a few hours.
And then it would crash.
But cool. We didn't touch on gold. I did want to look over this.
Yeah,
what
we got?
Please do.
Man, how crazy is it that this thing would just this is the all-time train that no one should just get in front of. This thing is just continuously
oh my god, it's still going up.
Going higher and higher. It's just, I don't even know how it's doing this.
What is it at now? What's the price at now?
Let's see the. Wow. All right, let's go to monthly.
34.
34. Bloody hell.
Come on, Trading View. What's going on here? Oh, did it just stop? I think it's not even taking data from. I don't know what's happening right now. It's from April of '98.
That's as far back as it'll go.
Right
that's when gold was invented.
Yeah. Right. Right. So that's when we put it on.
That's when humans first discovered gold.
Yeah. Nothing happened. Nothing before that.
Wow, it says this is the very beginning. You made your way through available data. Wow, that's crazy. I've never even seen this before. Wow. How much was it? This thing was $317, guys. At a low, it was $250.
I think that's when Gordon Brown, the UK Chancellor, sold the last remaining bars of gold in the UK. I think famously sold at the bottom, kind of thing.
What a great move that was.
Right.
Yeah,
this was like Bitcoin chart.
Crazy.
If Gordon Brown releases signals, I'll be following them. And
yeah, can you imagine?
I'll be taking this gold trade.
Did you say sell? Did you say sell? Let's buy sell.
Right. Whoa. Yeah, so this is kind of that same move that we was talking about earlier that was on GU, right? So for me, I wouldn't be interested in this until they touch the 200. But do I think it's going to come all the way back down to 32.50? Probably not. So if this does come down here and bounce off this 50 move and just keep going, like something like this, and then keep going and hit higher highs, I'll just miss the move. I would never actually be able to be in it because I would be expecting it to come down here to this 200. Right?
Yeah.
And then go. Because I literally don't have that's called MSU. I'm just making stuff up. I think it's going up. I have no data. I have no concrete nothing based on this working out. Oh, what made you take the trade? Oh, it bounced off the 50. Okay. And what else did it do? Oh, nothing. It just bounced off the 50. That's not good enough. That's not good enough. So yeah, this could totally do that, right? And I could totally see even if it did come back to 33.50, if anything, right?
Yeah.
And then kind of just bouncing back up. But if that was to happen, I would totally miss that move.
Yeah, got to be a correction sometime. They've got to take some profit sometime, haven't they? There's got to be a decent correction.
Yeah, exactly.
No
Yeah,
tree
you
grows
think
to the
so.
sky. No tree grows to the sky, except for this one, the golden
Right.
tree. You know.
Right. So it'll probably take one of these levels. You can see us bouncing off of one of those two.
Yeah.
One of those two for sure. What else we got? I think I was looking at FJ. Was it this one? Oh, yep. So I was looking at this earlier. It never did it, obviously. I got my alert set. And some of the times I'll name my alerts and say what it actually is. But sometimes, just how we were speaking earlier today about manual versus like alerts and hybrid. I just put look at this, right? Like when this gets to this price, I want to come take a look at it, and then I want to base my own decision off of it from there. Because technically it wouldn't be a full setup, but as you guys can see, once again, this is 5200 cross. And what happens? We don't get price touch this 250 EMA at all. Not once until right here. Right. So at this point is when I'm actually looking. Now I'm actually looking to see. You know, we got one leg over here, we got a second one over here. This is a nice little W structure, right? But I need a close above this for this to actually work. Now, yeah, this closed over here. This was, what time was this? This was at 3 o'clock in the morning, which as you guys can see, this thing set here this entire time. Since 3 o'clock, it's just been sitting here. It closed below. Now the next better move would be another close above this 13 EMA, right? Because otherwise, this thing literally been sitting here for since 3 a.m. And it's almost for 21 hours, 22, 23 hours. So I saw this earlier today. This is FJ, so it could possibly set up in Asia. So if it does, I'll see what it looks like then. I can't say I will take it because I really don't like to take Asia trades for one. But if it looks great, then yeah, I probably won't be able to help myself and I will take it. Right, nice little 1 for 1.5 on a Monday. But yeah, I think this was the only other thing that was even possibly close. I'll show GJ really quick. And kind of take it from there. Yeah, see, GJ is interesting because this is my other alert. So also on my system too, I like to put the alerts on here if it closes above or below because I might be doing something and then I end up missing it. So I'm like, no. And then I also like when I wake up in the morning to see that I had an alert that said it went below. So I'm like, all right, it at least got to the price point that I wanted it to go, but I don't know if it actually got executed or not. So I like to see those too. But yeah, this is a funky move for the simple fact that our 200 or 5200 cross all the way back here, right? I don't like it when it happens forever ago like that. This is like way too far away. This happened all the way on the 2nd. Actually, when all this madness happened, April 2nd, right? This one don't count because it never really touched it. It doesn't start counting until over here. And then what do we have? We got this funky range thing going on here, right? Just been kind of hanging out in this same little area. Yeah. So for me, GU and GJ have not been on anything lately. They just kind of just hanging out.
Ranging.
Nothing for my system, at least. Yeah, I would need something much more clear than this. Now you could almost justify trying to take this move. All right, maybe you got a 1350 cross, you got price kind of ran down, came back and hit this, right? And then you can expect it to drop here, but that's not clear. That's very ugly. It's like really, really ugly, actually. Right? Even if you was to, let's say you was to try to take this to this area. Well, not too bad. Not too bad. Almost a 1 for 2. This just isn't clear. The R to R is there, but the clearness of the picture is really not there. If you was to zoom out like we just seen, and you realize, like, dude, you're in a range, you're just catching In essence, you're not even catching the top of a range. You're catching the midpoint of a range, trying to hope that it comes back to the low. So for me, that's not really just good enough. I need more context than that.
Let me
not much going on there at the moment.
Let me really quick pull up gold. I'd love to.
Yeah, for sure.
Have a look. All right. So, because this is something I haven't looked at in a while, gold. But let's jump. See what's actually happened. So we had that push down into that area, and then it shot up, and it had that perfect. Oh no, this was back in the I remember when this happened. I can't remember whose session that was, where it just dipped in ever so lovely and then shot up. But like I said, there's nothing to the left, obviously, where we could base anything on. So we can only look at potential pullbacks from this move up. And from there, we've got a few, since it's such a heavy trend, I mean, I wouldn't be surprised if, let me drop it down actually to an hour chart. That should be fine, not a daily. I can see it a lot better now. And just pull that across. All right, yeah. Okay, so this, yeah, if we could, there's not even a pullback. I mean, technically, I wouldn't even call that a gap. Nah, that's not a gap. Really, the only place then where I'd be looking, but I doubt it will go this low, back down to 3.2. Yeah, it's
that's
just it's a big move down. I mean, it can do, but I think it will then just keep bouncing off these like smaller areas that we're currently in. Like here's a little gap from the daily session, which it's already kind of dipped in ever so slightly and then pushed away. And then there's another one here, which it already did. Like, so I mean, gold would be actually quite good to scalp in a weird way, because whenever these gaps get created and it comes back in, dips in, just buy. There was another one there, which it never actually dipped back into. Had a bit of a correction here, but then it broke off at this gap right here quite nicely. So it's respecting these areas really well. So you could actually scalp it quite nicely, to be fair.
Where would you put a stop if you did a gap
move?
If you did a kind of a gap scalp like that, where would you put a stop? Just the other side of the gap? Just below the gap, yeah.
Yeah, quite literally, just below the gap, like that. And then I'll target whatever the last high was. So for that one, it would be something like that. That one, well,
yeah,
there is no high for that one because there probably was. Let's have a look. So it came out, so the high was there. So it probably wouldn't have been the best trade. The risk reward would probably be right off. I mean, obviously, I would look in the footprint to see like where the buyers start entering. But say they entered around here, I think the risk reward would be well off on that one. Yeah, it would basically be a 1-to-1. Maybe you could have taken it. I don't know, but that one would have been pretty decent. That would have been a nice. Yeah, that would be a really nice one. This one here. But apart from that, yeah, that's pretty much it. Gold. It's going to be hard to trade, but you can hopefully get the pullbacks.
Yeah.
And I would still be wary about, like, I know it could just keep going up, but I'll be wary at any moment. Is this the end? Is this where the reversal comes in? Is this where?
100%.
Because I've got nothing to base, like, there's nothing above me to base any decisions on it. So
like, where's your target TP
to the last high?
God knows. Yeah, just go with it. And yeah, just have sensible places to take profits, I suppose, like projections and ATR levels, maybe.
Yeah. Scary. I hate trading a market like that. I like to know like something, to base my decision on.
Yeah.
Unless it's like a psychological level, maybe then I would stay away from big round numbers. So once we start getting to like 3,500, I would probably start looking at maybe there'll be a pullback. But I don't know. I don't trade gold anyway, so who cares?
So next target 3,999.
Right.
Yeah. Oh dear. Well, guys, I think that's time. Yes, it is time. Michael, Howard, it's been good.
Pleasure.
As always. And yeah, hopefully tomorrow we have a better trading day with actual, you know, the market wakes up. So yeah, awesome. And to everyone watching as well, thank you guys. Thanks, Robert. Thanks everyone else who was watching. We'll see you all tomorrow again.
All right. Sounds good. Take it easy, guys.
Take care. Have
All
a good
right.
one.